Good morning, everybody. Welcome to Jtraedz TV, where we discuss all stock-related contents and much more. Yeah, guys, I did had to jump on a little early, man, because I do have one more property to tend to today, and I need to get that out of the way so I will be free for the rest of the week without no interruptions at all. I was gonna do it over the weekend, but my kids wanted to spend time with me, and I wasn't gonna turn that down, man. So anytime my kids want to be with me, I'm always here. So. We're going to keep it rocking and rolling. So I did jump on a little early, guys, so I can be with you guys early this morning. Then I'll be leaving around 11-ish, right around that time. So, again, if y'all want to go over anything, please feel free to let me know, guys, what you guys want to go over and so forth. Right now, we do have this we still have some weakness. I do see, and I'll go to my 12-hour chart, guys. We do have some weakness on let me see, on SPY. Let me go to it real quick on my 12-hour chart. We do have like a bear flag pattern that's setting up that is taking place. I'll go to it real quick. So right here, guys, after we had that dump on off, that nice little flush we had last week, you can clearly see that we have this bear flag pattern. I did put up a downtrend pattern that's right in front of us, guys, that we do have. Once we got rejected at the 690s all the way back down, and we got that move right back up to around the 85s and so forth, and you can see the lower high bills, and right here you can clearly see a bear flag pattern that's right in front of us, guys. The main key areas, or the main pivot point that we did talk about last week, was 7250. 7250 was the main area that we needed to stay on top of to get that possible reversal back up to the upside. But as you can see right now, we are back underneath that pivot point, 7250. We are pulling back down into the low areas of 670.50 down to the 670. So definitely gonna keep our eyes peeled. Now the strongest support areas I do see, that's gonna be right here. Let me go to it. I'll draw it out real quick. I'll draw it out. Right here, guys. So you can see right here. This was the first area that was around at 73.30, 673.30. I say 73, I'm sorry, 667.30, where we got that nice little bounce and then move right back up to the upside. You can clearly see that. We ran all the way up towards 90, close towards that 90 area, and then got that pull right back on down. You can clearly see that. Now, the second area was right around here. That was this level here. That was that secondary level. These are where your buys came in aggressive. Your buys came in right around the 663.94 level, 664 if you want to round it off, right here. That was that key level. So you can see these bottom bounces, where the bottom bounces occur, basically where you got a strong demand zone at. So you can see right here where you have your strong supply zone, right around these two specific levels, here and here. And you can also see where you have your strong demand zone, which is right here and right here. So you can see the rotation. You can see every time we come down to these bottoms, buyers step back on in, we get that nice push back on up. Every time we come around the tops, sellers come back on in, we get that push right back on down. But you can see the overall pattern. You can clearly see the overall patterns of downtrend. Ever since we hit these 690 areas, we've been on like somewhat of this little downtrend-like pattern. So we did fall underneath that 7250. That was going to be key. That was the key for last week. We needed to stay on top of that price point. We'll see if buyers can get the opportunity to get back on top of that price point. But now that we underneath it, it's going to hold up a strong resistance at this time. So you can see right here, anytime that you were underneath that price point, it acted as resistance. Nice pull back on down. Nice resistance, pull back on down. When you on top of that price point, you got a nice little bounce right back on up, bounce back on up. So you can see that 7250 is going to be a strong key level on both ends. Underneath it, room to come back down. Above it, room to go right back on up. So 672.50, that's going to be your key. That's going to be key. If buyers can get that body of that candle to push back on top, we can definitely utilize 672.50, but if possible, push right back on up. But we definitely want to get that break back above 76.50, but to push back up to the upside. So definitely keep it on watch, man. So we definitely keeping everything on watch to see on how the market is going to pan out. Don't forget, guys, this week we do have NVIDIA earnings coming out this week. Let me go to that real fast. I know we haven't went over earnings in a long time. Let me go to it real quick. Let me go to my earnings. Let me go to the earnings real fast, man. So let's see where you located. My earnings. There we go. I got it. All right, here we go, guys. So right here. So we do have NVIDIA earnings coming out Wednesday. That's going to be after the market close. So definitely keep your eyes peeled on that. I don't see any other blue chip companies other than NVIDIA this week. So that's going to be a major key to see, what type of results that we're going to have, whether we're going to move back to the upside or continuously, create more downside. And we're also going to take a look at NVIDIA's charts too to see on, where we at this time. As far as economics, we didn't really have anything too strong this week. Let me take a look at it real quick. Like I said, we didn't really have anything too major as far as economic goes. I mean, I'm gonna double check it to see if they're gonna that's gonna stay. For sure for Thursday, let me see, Wednesday, Thursday, Friday. I know for Wednesday we're gonna have crude oil inventories, FOMC meeting minutes, not the meeting, but the minutes. That's gonna be at 2:00. Thursday we have the Philadelphia Fed manufacturing. Let me maximize a little bit so you guys can see it. 10 o'clock, we're going to have existing home sales. That's going to be Thursday. And then Friday, all we're going to have really is the S&P Global Manufacturing and Services. That's going to be at 9:45. So really not really anything strong this week, like really, really, really strong. I know the market, not the market, but the government has reopened. So I know a lot of things are lining up. But guys, you clearly see the setup though. You clearly see the setup right here. Definitely, like I said, underneath that 72.50, that's going to be key. Below that, we could get that continuation pullback. Above that price point, we could get that possible pushback up. Now, the only thing that's concerning of me with SPY this time is the fact is we underneath all the indicators. Now, when we were on top of those indicators, you had the 9, the 20, and the 50. The market went up. You can see how the market followed it, right? Now being underneath those indicators, now you're starting to see a little bit of more bearishness than bullishness. So, in other words, if we look at it from a put standpoint, the put should be up, the call should be down. So even if we was to take this chart and flip it upside down from a put standpoint, it should be doing the opposite. So as we're on a downtrend on the call side, we should be on a uptrend on the put side. So let me go ahead and flip this chart and make a duplicate copy real quick, guys. So let me do this. So right now, again, we're seeing how it looks on the call side. It definitely looks weak. We're definitely on a downtrend on the call side. So now let's flip it to the put side to see on how far we can go on that one. So in other words, to kind of tell us which, where do we need to, what momentum or what direction do we need to focus on, in other words. So let's go here. So if you notice on the put side of things, as far as SPY, you can clearly see the puts are picking up. So you see that? So it's doing the total opposite. So to see the puts are on an uptrend and your calls is on a downtrend at this time. And right now we are underneath that 72.50. We're still getting this nice little weakness to show, but look at the puts. Look at the puts. Look at the indicators for the puts. Now, as far as the puts are the indicators for them, you got the indicators underneath. Taylor, good morning. Good morning. Good morning. Yeah, I got on early, and as I was telling everybody else, Queen, I do have to do one more property today. Knock that out. Some lawn work. So I will be leaving around 11:30ish, somewhere around that time. So I'm gonna be with you guys at the early stages of the morning, from 9:30 to like 11:30ish. So I will be with you guys till then. Break down everything as the market starts. What to look forward to, what direction we need to stay focused on, whether it's on the upside or the downside. So I'm gonna break down everything as much as I can, as we do start off Monday. We do have NVIDIA earnings coming out. That's gonna be Wednesday and so forth. So right now, before the market open, I'm just trying to let everybody know so far as SPY's direction. So this is the this is the normal chart for SPY, and this is the put chart for SPY. So we're looking at it from a put standpoint, and we're also looking at it from a call standpoint. So as your calls are going down, your puts are going up. So your puts are looking a little bit more stable than the calls. So if you notice, with the calls, you're underneath the indicators. Your 9 MA, your 20 MA, your 50 SMA, right? Because everything now is holding you down. Now, if you look at it from a put standpoint, all your indicators are underneath you. So that means that's holding up as support. And as long as those three indicators hold up as support, you got a gap fill up to that 200-day moving average, right? So that means we have room to go down towards the low 670s, 678s and so forth, all the way down to the 660 to the 650s. So you can see it from a put standpoint. We do get that gap fill on how far we can fall on SPY. So we know this area that we need to fall, we need to take out. That's going to be around at 664, because you got to remember, that's that bounce from Friday. So again, the chart is upside down, guys. So that means that bounce was the resistance on your puts. So in order for us to get that nice move up, that means we're going to have to crack around that 664 to get that nice movement. Jingle. Good morning, Queen. Good morning, good morning, good morning. So if y'all notice, look at the call setup versus the put setup. So you got the puts looking more on an uptrend, and versus calls that look more on a downtrend. So one look more like a bear flag, the other one look more like a bull flag. So if you notice that, the puts look like it's setting up for more of a bull flag pattern, and your calls are looking like it's setting up for a bear flag pattern. So let me do this real quick. So let me go ahead and take a screenshot of that. Let me put this together real quick. Let me do this. All right, bam. So if you notice, you got a strong candle on your puts. See that? You got more of a bull flag pattern setting up on your puts, and then you have more of a bear flag pattern setting up on the calls. See that? Well, it looked like if we can still continue on down, back down toward the downside, towards these bottoms, possibly around this 664-ish area where we had these last Friday bounces. Both Fridays in a row we had good, strong movements back up. You had that bounce off that 64 once. You had that bounce off of 64 twice, but we're still looking weak. We're still looking weak, still coming on down. So as we're coming on down on the calls, you're going back up on the puts. So the puts are looking a little bit stronger than the calls right now. So if y'all notice that. So these charts, like I said, this chart represents calls, and this one represents puts. So that means your puts has more of an uptrend where it looked like we could possibly fall even further, and your calls look like it's just still continuing on down. So just based off of that, it should kind of give you an idea on what to kind of lean more towards. So basically in a sense of more downside in a sense. So with puts, as long as you stay underneath 672.50, you do have room to, get that continuation possible, pullback. Now, if buyers can get back on top of 72.50, then we can utilize that for support to possibly reverse back on up. But right now, 72.50 is going to be key. That's going to be key. So right now, puts, you're underneath it. So that, as far as on the short side, they're looking good. Call side, you're underneath it. That's not a good, that's not a good thing right now for longs at all. So like I said, calls are on a downtrend, puts are more on an uptrend. So you can see the difference between the two. Which one has a better direction? Which one has a more, better stability? So now that I done broke that down, guys, now y'all can see it from both standpoints. All right. So like I said, calls, we still got a downtrend setup going on, and not just that, we did so much research looking into that. Remember, we looked at the 5-year chart. Remember, we went to the 5-year chart and moved this over to the side. Bam. So y'all notice what I told y'all about that red trend line. Man, we was talking about this like weeks ago. We said that how strong that red trend line was on that 5-year chart. Remember, the last time we hit that was in 2021 and 2022, right? You remember, and remember I asked you guys this. I was like, I wonder, can we see a repeat of 2021, 2022 going into 2025, 2026? So you notice that when 2021 was ending, going into 2022, we got that major pullback down, right? We had a bear market in 2022. So the question is, will we have a possible bear market in 2026? So that's the $1 million question. Now another thing that kind of that I'm thinking about as far as with SPY, we still haven't got that healthy pullback back down to this old breakout level. So in other words, you still got room to possibly fall back down this way towards the 50 SMA. So last time we had a healthy pullback, that was in the early areas of 2025, right? We pulled all the way back down to what? The old areas of 2021, 2022. The area that caused the bear market for 2022. If you put a price point, go right across, that's 480, right? So as 2024, 2025 rolled in, we was on an uptrend, ran up towards that 610-ish area. We got rejected. And we hit this level and then got that strong pullback all the way back down to 480. But you notice we had a healthy pullback. So once we got that healthy pullback, which brought us all the way back down to this green trend line, buy step in. So if y'all notice, every time we hit that green trend line, buy step in. 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 Now when we hit the red trend line, sell a step in. Red trend line, sell a step in. Red trend line, sell a step in. So these are the candles that we are around right now, guys. This is in 2025. These are weak candles. So this Monday through Friday. So right here, look how it's starting to get weak and hitting this red trend line. Look how it's getting weak. How we are not able to break above it. So that's showing weakness within itself as we close out in 2025. So as long as that area holds, we could see some more pullback coming. We do have NVIDIA earnings coming out and so forth. But keep in mind, we have not got that healthy pullback yet. That's the only thing that's concerning of me. The RSI was still sitting pretty high. I mean, 64-ish. We still haven't got that cool off yet. So that's the only thing that is concerning of me when it comes down to SPY. Like, for example, as I showed you right here, guys. Last time, like I said, right here. The area that caused the bear market in 2022. What happened in 2025? We pulled all the way back down to what? 480. And then got that nice bounce back to the upside, right? We got that healthy bounce and got, and got that move. But now, we haven't pulled back this year as far as the new breakout zone. You notice that, right? So right here, this is the new one. So we haven't pulled all the way back down to that key level for the possible bounce back up. See, we haven't got that yet. That's the only thing that's concerning of me, and that's around that 610. So you can see right here, 610 held up a strong resistance, but we haven't pulled back to utilize it as strong support. So that's the only thing that's concerning of me is like, when will we get that strong pullback down to this key level? So that's the only thing that's concerning of me as of now. As we start to get hammered right around this strong resistance. That's the only thing that's concerning me with SPY right now. Because, we have not yet the break. Look at those candles getting weaker and weaker and weaker. We have not yet broken out yet. We hitting a strong resistance level that we having a hard time pushing above. So, that's the only thing that's concerning of me right now with SPY. Only thing, guys. Only thing. You can see it right here in real time. Look right here. Hitting that red trend line. Strong resistance. Haven't got that strong pullback yet. To retest this 610 level for that possible, bounce back up. But we haven't got it yet. So that's the only thing that's concerning of me right now. And you can see the market is starting to get weak within itself. From Friday to Monday, look at this. The market is getting a little weak. He's starting to cup a little bit. If you notice that, he started to create somewhat of a little inverted cup. So it's getting weaker than stronger. What do you guys think? Like I said, it's not just about me. I want to ask you guys this. What do you guys think? I know we got as high as, throughout the other, the past few weeks. We got up as high as, 80, 86. Then we got weak. Came back on down 84s, back on down 82s, back down into the 80s, and we kind of got stopped out right here from Friday into Monday this week. We've been getting stopped out, but if you notice, the price points are getting lower and lower and lower and lower. So instead of going higher, we're going lower. We're doing the opposite. So we're building more of a downtrend than anything. So it's like from this level here, it's more weakness. So if we, let me see if I can go to maybe a 30-minute time frame. Because look at this. You're building a lower high versus a higher low. So I'm going to definitely keep this on watch. So I'm using my 5-minute time frame real quick. And right here, you can clearly see we got like a downtrend like setup right here. From these levels, it's getting weaker instead of stronger. We ran up as high as 76.50. We were talking about that last week. And look right here, started to fall back down even lower. Now down, we know what the sellers are trying to do. We know the sellers' goal is to kick those buys out of the 70s back into the 60s. So that means you're going down even lower. So you're going from the 80s to the 70s. Now, again, if we get even more downside, possibly into the 60s. So that means that's just creating more of a bearish-like rally versus a bullish rally. Let's look at it from a 30-minute time frame. Let me see if I can... Let me bring that up real quick. But so far, this is the range that I have as of now. From this morning, tops pre-market, around these bottoms, right around 670. So far, the bottoms as of now, before the market opens, is around 670. We haven't came all the way back down to the 678s yet. But right now, 670 so far. Tops is around 670, 650. Tops, mid area is going to be around that 672.50. And these bottoms are, I want to say, around the 678s if we do get a pullback in the start of the market. But everything still looks weak. Look at your indicators. Your 9 MA has failed. Your 50 has failed. Your 20 has failed. Everything has failed back on down. Look at this. The only thing holding up is the 200-day moving average, but everything else is like your indicators are falling. So that's representing bearishness. And man, look at the 5-minute time frame puts on right here. Look at this. Your puts are showing an uptrend on a 5-minute, and your calls are showing a downtrend. So we're doing the total opposite. So right here, guys, this is the puts. This is SPY upside down on the 5, and this is just a regular chart on the 5 for SPY for calls. Calls are going down. You can clearly see that. While puts are going up. So puts have more of a uptrend, while calls have more of a downtrend. So that's the only difference. And you can clearly see the two. Look at the two right here. Look at them. One going down, the other one going up. And another thing to also give you confirmation, look at VIX. VIX does the opposite of SPY. So if SPY goes down, VIX goes up. If SPY goes up, VIX goes down. So right now, VIX is showing more strength than SPY. So that means VIX is in control. That's the more of the bearish setup. So that means as long as VIX is above SPY, that's bearish. That means more weakness can present itself. So we got about 4 minutes, guys, to the bell ring. We still got NVIDIA still looking weak, even though we got earnings coming out soon. How low can we go on NVIDIA? Let's see. How much lower can we go on NVIDIA? Let's take a look at that real quick, too. NVIDIA. So right now, yeah, guys, to me, it's representing bearishness. I'm just going to be honest. It looks a little bit more bearishness than anything. So just be on lookout. Now, could we go back to those areas? You know, could we retest 7250? Yeah, I mean, we can push back up to retest 7250s up to the 73s, but you got to keep in mind, we're back underneath that 200-day moving average. So you got resistance right above your head. You got to keep that in mind. You got room to go up, but we have some resistance because we're no longer on top of 7250. We're underneath it. So now that can be utilized for resistance, you know, so keep that in mind. Let's take a look at NVIDIA real quick to see on how this bad boy is setting up. You know, for this week as the earnings are coming out. Let's see. NVIDIA. How we looking on you? NVIDIA's, yep, that still look downtrend-ish. Coming down to this little trend line here, right down to that 185. You clearly see what NVIDIA's doing. Got a strong engulfing red candle, pulling back down to the 185-ish levels. We did bounce off of 185 at one point where we recovered from 185. Got that nice push right back into the 190s. Now right back on down. So watch this 185. So if you're going short, shorts, we want to crack 185 back down to these low key areas of 182 down to the 180s. Well, we'll come back down to that 200-day moving average, in other words. So, but watch 185. Watch 185, and you do have that trend line. You do have that trend line merging right with that 185. So watch that key level here for the shorts. I mean, if you did get in for a swing for the pullback down, you're looking good. I mean, you got money to cash out on as soon as the bell ring. If you caught, you know, these tops up here, back on down, I mean, you pretty much banking on that. But if you're still considering going in for a short and you haven't got in yet, we definitely want to get that crack underneath 85 and get that continuation sell-off. We'll fall underneath that level, but this level will no longer be support, and we'll start to fall back into more of the low 80s. So we got to crack this $50 mark, 185 into the more lower 80 range. So we can crack this level. You have room to fall back down towards that 200-day moving average down into the 180s when you'll get that second leg down, the second pullback. We do have this little strong area right here too as well. That's going to be around, what, 182, what is this right here? Like 182.90-ish right here. We need to crack that level too. But 185 for sure. Watch 185. Don't jump in just yet. Wait until you get a pullback underneath it. Got about what we got left, guys. 42 seconds. 42 seconds. 42 seconds. So 185. And what was this one right here? What was the open on this? 182.89. 182.89. Make a duplicate copy real quick as the market is opening. Right. What was it? 182.89. Was that it? Yeah, right here. Right here and right here. So yeah. So those will be the key levels back down. All right, guys. Bell is about to ring. Got about 10 seconds. 10 seconds. 10 seconds. Looking like we're still getting weak on SPY, guys. We may pull back down to my little key area in a matter of 5, 4, 3, 2, 1. Here we go. So watch this key level. Let's see. Right now, still looking weak, guys. From these pre-market tops, still getting a pullback. That means your puts are still going up. Look how it's doing the opposite. Look at this. Look how your puts are going up. Your calls are going down. See that? What was our levels on the video? We said 185. 185 was going to be the level that we need to crack. Yep, we are cracking. We down to 185 that we talked about on the video. 185. Watch that 185 level. Still pulling back on SPY. Pulling back on SPY to my key level right here, guys. Pulling back, pulling back. So that means you're still pushing up on your puts. Puts are still pushing. What was that key level I had on put side on how far we can drop? 667.50 and 664. That was those that was Friday's bouncing areas. So that was these levels here. That was that bounce from Friday. And what was the other key level? That was 667.50. Make a do big copy of you. just in case. 667.50. All right, post that. That's about, yeah, they lined up damn near right with each other. So right now, when it came down to these bottoms right here, guys, came down to these bottoms. So still looking weak, still getting that flush from pre-market tops, 660, 670, 650, all the way back down underneath 670. So right here, guys. So far you done had a damn near $6 drop, almost a $7. Still pulling, still pulling, still pulling. Puts are still going up, guys. If you are in the put side, still going on up. Calls are still dropping. Calls are still dropping. Calls are still dropping. So puts are still looking good. Still looking good. Your low areas all the way back down to Friday's low. That's all the way back down to a 64. So we still got some ways to go before we even hit that. But watch this level here first. Watch this level here first. Right where I got my first white line at, this box, watch that level first. Watch that level. Let's take a closer look. Take a closer look. Let's see how we looking so far. All right. All your indicators are still face down. We're testing this 9 EMA. Got your VWAP pointing down. Watch this key level here. Let's see. 670. So they're gonna be look like buys are trying to stay above 670. Let's see. Right where the open is. To me, I still think puts have it. So I'm keeping on watch. May get a little bounce back up, but we got a lot of resistance above our heads. A lot of resistance. Cause don't forget about your pivot point, 7250. Don't forget about 7250. That's your pivot. All right, so guys, what do you guys game plans? Let me ask you guys this: what do you guys game plans? Are you waiting on bounce opportunities for for the basically back up to the upside, or you still are you still looking for shorting opportunities? Like, what are you guys' thought processes? Still looking a little weak. Meth, what's up, boss? Hi. Good morning, good morning, good morning. Yeah, as I was telling everybody, for those who have just joined me, guys, I am going to be here till about 11:30ish because I do have one more property to take care of today, and I'm going to get that out of the way so we'll have no more distractions for the rest of the week. So that's why I got on super early. So I'll be here with you guys at the beginning of the market. And, starting tomorrow, we'll go back to normal time. But I jumped on early because I do have to attend to one more property. I'm done for the rest of the, with the rest of that. I'm done with it.
Jtraedz says, dollar SPT short at 674 area, dollar TSLA short at 396.
Yeah, and yeah, I agree with you too. Yeah. I say between that 72.50 up to 74. Yeah, because your 200 will be lined up right here with this little pre-market bounce where you got rejected at Naughty. So I do agree with you on that. 672.50, which is your pivot, and then you have this little area right that's lined up almost with the 200-day moving average. That's gonna be up here. So right now they're trying to go for a little bounce back on up. If they can get above that 20 EMA, you do have room to run up to the 50 SMA, which is gonna be right around 72, 72.50. 72, 72.50. So I do agree with you on that. Go from these indicators, feel that gap fill up towards this indicator here, that 50 SMA, which is going to be lined up right around 72, 72.50. So I do agree with you 110% on that. I agree with you on that. Oh shoot, I had the wrong contract open. Why the hell I had TQQQ? I was wondering why the numbers or the prices looked different on my end. It's like, what the hell? All right. So here they go to gap up, guys. You're right above your two indicators, 9 and 20.
Says, dollar SPY you are shorting at 572.50. Whoa. 374.
You mean 672.50, man? Boy, you be throwing me out with them numbers. You mean 672.50 up towards that 674? Yeah, nah, I get what you're saying. I'm gonna keep it on watch to see. I'm gonna watch because I want to see because I want to play right at 72.50. I want to see if we get a little overextension. But you do, if you did catch the little bounce, you do have room to push back up towards 72.50 though. Keep that on watch as you go for a gap fill from these indicators, 9 MA 20, up towards that possible 50. That's gonna line up right with 72 to 72.50. So you do get y'all have a little opportunity for a bounce back up real quick. Nah, I got what you were saying. I got you, Queen. I get what you were saying. I was messing with you. Nah, I was messing with you, Queen. I was messing with you. Nah, I got what you were saying though. I got you. I had to mess with you. I got exactly what you were saying. So right now they go to the little bounce back up. Keep that on watch. Keep it on watch. 72 to 72.50. Keep that on watch, guys. So they go you bounce back up real quick. They go to bounce. Plus, you got the video going on the little bounce. They did recover 185 for that pushback on up. Because you remember I told you guys, watch 185 on the video of y'all trading the video, 185. They go to gap fill, guys, from these indicators up to that 50 SMA. Gap fill, 72, 72.50. Keep it on watch. Room to push up towards those key areas. If you didn't take that bottom bounce back up.
Jtraedz says, $SPY to 67.49 resistance.
Yeah. So if those buys.
Jtraedz says, 673.50.
Yeah, it's gonna be around that area. Now, if we do get that strong push, yeah, 73.50 up to 74. 73.50 up to 74. So yeah, I agree. Yeah, I agree with you on that. Yeah, I had the wrong damn contract. I had a TQQQ instead of my SPY. I don't know what the hell I was thinking on that one. So there go the little possible little gap fill back up. You already got your 9 MA, 20 MA, 50 SMA. So we can go for that continuation push. Get that little break above 72.50 for that possible push up towards that 200-day moving average, guys, right here. That's going to put you around 73.50 up to 74. That's going to put you around this little pre-market area right here. What's up right now? Google's top gainers right now. We still got, I mean, Nvidia's still looking good. Got Nvidia still looking holding. From 170, that 185 recovery for that move back up. Went up to his 50 SMA. It's gonna be around what, 188ish. So yeah, we already got that push. SPY still testing that sword 72.50 that we talked about. 72.50, 72.50 that we just talked about. I told you, get that bounce. You had room to go right back up to that pivot point. 72.50, pivot point, pivot point. Keep it on watch. You gotta keep in mind, guys, we're underneath it now. So let's see though. Let's see. If buys can go for that push, they have room to go up to that 200-day moving average. That's gonna push you around 73.50 up to 74. 73.50 up to 74. And that should start to pull puts back down towards this 200-day moving average. That's gonna be around, yeah, about 74. That's gonna pull the puts back down this way towards that 200 on this end. So right now, I got a nice little bounce back up real quick. Nice little bounce, nice little bounce. But watch that 72.50. That's gonna be key. 72.50 is gonna be key. Now the strongest resistance I see to the top, the area that we need to break, that we're having trouble breaking, is going to be around 76.50. So 72.50 up to 76.50. That's going to be, yeah, so right from here to here. So right now, still pushing, guys. There go that push still. Here we go. Trying to push up to that 200. Let's see. Still trying to push up to the 200. Still trying to push up to the 200. Let's see, can you go for it? Let's see, can they go for that push? Start to try to test that 73.50 or the 74. Let's see. We gotta keep in mind, guys, pivot point. Remember I told you 72.50 is gonna be key. Right now, look like we're gapping on top of it. Let's see. Look like they're trying to stay on top of it. So look like buys are trying to hold 72.50. If they can hold it, they have room to still push back up to the upside. Let's see. Gonna be a little bit of back and forth right here. A little bit of back and forth. But look like buys may have it right now. It was looking a little weak, but look like buys may have it. Let's see. 72.50. Yep, holding up. You can see that lower shadow. You can see the body of the candle. So it's gonna be a back and forth right here. But as long as buys can stay on top of 72.50, you have room to push back up towards at least 73.50 up to 74. So as long as they can hold 72.50, I mean, you have room to go up towards this 200 right here, right in this little range when you got that third leg up. So you got leg 1, leg 2, and this will be your third leg up. That'll be a possible third leg up to the upside. So right now, I mean, all your indicators now back underneath you. Got a nice little bounce back on up. Now everything, you're above the VWAP. So just keep it on watch, keep it on watch. Like I said, you're going to see a lot of back and forth, but right now, buys may have it. Let's just see. So right now, on this upside, we want to trap the sellers. Trap those sellers. So buys need to stay on top of 72.50. Need to hold 72.50. Need to trap those sellers. Trap them. So we can create somewhat of a short squeeze up. If they can hold it, short squeeze, we have room to possibly squeeze up to the upside. I mean, I know we didn't hit up my line directly, but we came close to it and then got that reversal. Then got that nice move back to the upside. So right now, a little bit of back and forth. A little bit of back and forth. 72.50. A little bit of back and forth. But as I told you guys, you have room to go back up to that price point because it's like a magnet. Yo, you like yank right back up to it. A little bit of a battle right here. Got sellers sitting here trying to keep those buys from retesting that 72.50, trying to cross back above it. But keep it on watch. Let's see. Let's see, can buys have the strength to push? Yep. See sellers coming in again a little bit. Let's see. Cause I told you guys this level is gonna be crucial. That's why I have it listed in yellow. That's why I have it charted in yellow. That's gonna be a very crucial area. Above it, upside. Below it, downside. Because that's gonna be a pivot point. That's gonna be a pivot point right now. Yep, getting a little bit of a pullback on it. A little bit of a pull. So sellers are definitely trying to keep buys underneath it, underneath 72.50. Definitely trying to keep them underneath it. What we got left on this candle? 3 minutes. Still got 3 minutes. Let's see how we're gonna close out. So just pay close attention. Just focus on that price point. Yeah, if you're going long, you know we need to get above it. Shorts, you know you need to stay below it. Because that's gonna keep you in this bottom range. Keep you in this bottom range. From 72.50 back down towards these key areas here. But if buyers can get back above that, then we can focus on the upper portion. Shrink it up just a little bit so y'all guys can see it. So 72.50, watch that. See a lower shadow still above all the indicators still. Lower shadow, look like they're trying to create that bear trap. Let's see, can they do it? Can they succeed? Can those buyers succeed with the bear trap? They got to get back above 72.50. Let's see, can they do it? Look like they're trying to. Look like they're trying to. 72.50. Trapping those shorts. Lower shadow. There we go. Flipping it. Trying to flip that candle. Trying to flip the candle. Look like they're trying to go for the flip. But you see on how the body of the candle damn near got perfectly on top of the 72.50? So you see where the buys, again, that psychological level where buys are trying to stay on top of. You see the psychological level on that? Which is why I was telling you guys, watch 72.50, 72.50. We need to create a bear trap. We need to trap those sellers. Get back on top. We need to reverse it. Come on, buyers. Come on. Let's see, can they get it? Let's see, can they get it? Let's see. Do we have enough buying strength to get this push? I mean, we had a nice enough buying strength to push up, but can we get this continuation push? So I mean, buy stepped in and pushed all the way up towards 72.50. Now we got to get this second leg up. We need to get back above that price point so we are able to go up to 74 to 76, where we can retest these pre-market highs. Because if you merge these two candles together, I mean, you got like one engulfing green candle. Almost giving off somewhat of a bull flag pattern. So just keep it on watch. Keep it on watch. And again, don't take your eyes off of the 72.50. I'm telling you, it's going to be key. The only time to take your eyes off on it is when we leave it. So right now, back on these 72.50, got a little gap on down. You're still back in this little range. Like I said, either we're going to break out or we're going to come back down to retest. So right now, we still got a little bull flag pattern. So let's just see, do we have enough buys to push? Go for the squeeze. So let's see. Because now again, they got a bull flag pattern where they can utilize that to push. And they can go for that push. You'll go up towards that 200-day moving average. That should push you around 73.50 up to 74. But right now, it's still battling 72.50. Let's see. We just need that volatility. We just got to get that volatility and go for that push. And then NVIDIA, on the other hand, you tested the 50 SMA right around 188. So put it like this. If NVIDIA can get that break, that should help contribute to SPY. So if they can break 188 and go for that push up towards the 200-day moving average, even on that one, that should help, give SPY that boost too as well. If they can get that breakout above 88 up towards 190, that should help SPY go for that catapult up. Because you do got a bull flag pattern like right here. It's a bull flag pattern where those buys go for that possible squeeze up. They can go for a possible squeeze up. I mean, it look like they trying to. Look like they gearing up to do it. So it look like even with Nvidia trying to go for that move above 188 up. Because if they get that successful push above 188 for Nvidia, that'll create a gap fill from these indicators up towards this indicator here. So that should push you up towards 190. And you're not too far from the 200 moving average. And you do have a bull flag. I'm trying to see. It look like they trying. There you go. There you go. There you go. There it is. There it is. There it is, guys. There it is. There it is. Bull flag pattern. So let's see, can they go for it? So again, if they got enough strength, we should be hitting around 73 to 74. Come on, buyers. Come on, buyers. Come on, buyers. That 72.50, boy. It's gonna be a beast. 72.50. But if they close on top of it, they got it. What we got left on this candle? Oh, did we just open this candle too, huh? So we got about 4 minutes on this one. 3 minutes. I mean, right now they still looking good as far as pushing towards the upside. They got it. 73 up to 73.50. That'll put you around that 200 moving average. Bull flag pattern still commencing. Bull flag pattern still commencing. What else we got? There you go. There you go. There you go. There you go, guys. There you go. There you go. There you go. What else do we have? So in the video, we know 188 when you stay above 188. Well, what else we have? I see Google is in the 5%. What Google looking like? I mean, Google looking nice. Google on top of the 200. Trying to go for that push back up. What do we have? 295. That has a bull flag pattern too. Damn, they kind of look identical. Google and Spot. There go your bull flag, guys. There you go. There you go. There you go. There you go your bull flag. There it is. There it is. There it is. When we were talking about from those indicators, bam. There you go. So let's see, can we get 73.50? 73.50 up to 74. 73.50 up to 74. So come on, come on, come on, buyers. Come on, buyers. Come on, come on. So I'm gonna put my alert. I'm gonna put one alert at 74 to see can we get it about as close to it. I'm gonna put my alert at 74 to see can we get it. So we called those areas correctly. All right, let's see. All right, so I got 74 and 73.50 right here. Now I'm gonna put another price point at 73.50. See can we get it? Come on. There we go. Ah, damn it, where my line at? Oh, there we go. Ah, get the upper shadow. Hold up, guys. Keep it on watch. Hold up, hold up. Keep it on watch. Upper shadow. They still fighting around at 72.50. Got a bull flag pattern on Google. I see that one. Tesla's right behind it. What Tesla looking like? Oh, Tesla look down. Tesla, trying to go up to 415. We need to break 415 for the possible push up to 420. So Tesla's ramping up. So Tesla's looking good on the upside. 415 is gonna be next. 415 up to 420. So I'm gonna put an alert for 415. That's gonna be the next possible key, because you know that Tesla likes to move by $5 increments. Still watching SPY though. Still watching SPY to see if we're gonna hit those key levels. Alright, let's keep it on watch. 415 is going to be the next intended target for Tesla, for my Tesla traders. 415, keep that on watch. I got an alert here. Up to 420. Alright, keep that on watch. Alright, so I got two alerts for Tesla. 415, 420. So I got two alerts. Two alerts for that one. SPY still got between that 73.50 to 74. Gapped up, so it's still looking good. So still gapping up, still gapping up. So still trying to go for that squeeze up. Still trying to go for that squeeze up. So that's still looking good. Tesla, we not too far. What else we got? AMD moving too. God damn, I'm trying to check everything, guys. I'm trying to go over everything because I know a lot of people trading different things. AMD, I need to stay above. What is that? 248 for the possible push up to 250. I'm gonna put 250 for AMD. AMD 250. I'm trying to put as many targets as I can, guys. I'm trying to help everybody as much as I can. All right, so 250 for AMD. All right, 250. All right, next. Meta. What was the area I was looking for? What I was thinking about on Meta. Meta was I want to say Meta was like 620. because Meta was the one I was waiting on. Because Meta had the lowest RSI. Meta was the one I was like practically waiting on. There go that squeeze still, guys. Spy. There goes squeeze still. Still squeezing up. Bull flag pattern that we just talked about. There we go. Nadia, you in it? Anybody in on Spy? Still on this bull flag pattern? Still pushing. Remember, we still got that 200 day. Keep in mind though, 200 days is gonna be a tough little resistance. I mean, as you still pushing, you can see those sellers like sitting here waiting, but you still got room to squeeze up. There you go. There you go. There you go. Let's see. 73.50. Let's see, can we get it? Oh, there it is. 73.50. Bam, called it. See, 73.50. Let's see, can we break past that up to 74? $73.50. We hit that one. What just went off? One of my alerts. Oh, my Tesla went off. Tesla went off. Tesla just went off. 15 hit. Yep. 415 hit. Told y'all. 15 hit. 415 on Tesla hit. So one of my alerts just went off. Yep, Tesla. 415. Told you guys. 415. We can get that continuation push. Next key level gonna be 420. Possible 420s, but 415 we need to stay on top of 415. So okay, I could create a range for you guys for those who don't know what range we're in right now with Tesla. So right now Tesla you'll have 410, 415.
Lucky NW5TD
Bam.
says, TSLA made me money. I'm done for the day.
Called it. I called it. I said 415 too on Lucky on Tesla. I said 415 was gonna be that target. So you got in on that one. Shout out to you, boss. Congratulations on catching that one. Yep. And then look, we hit the 200-day moving average. Bam. Hit the 200. We hit that one. 415. Let me correct these. So shout out to y'all. I mean, we called it. I mean, to say at the beginning of the market. I mean, good calls. I mean, good profit, guys. Good profit. And 420. 420. So 420 was my next one. We can stay above 415. What we gotta? Because normally, let me see. Tesla would be like 417. 50 up to 420, something like that. I get so used to these prices, man, because you kind of see them like repeatedly. I think it's 1750, like that little mid area before you get to it. Yeah, something like that. 415 up to 417.50 up to that level. I mean, but your whole range is 10, 15, 20. That's the whole entire range for Tesla. So in other words, 15 is gonna be the mid area. So let me color code it for you guys. So that means the bottoms that should be your possible support. Tops that should be your resistance, and then 15 should be your pivot point. That should be your mid area. So now y'all can kind of clearly see what I'm talking about with Tesla. All right, there you go. Bam. Bottoms, mids, tops. There you go. Spy. I mean, we hit that 200 as I told you guys. So 200. I'm trying to see, can we get that 94? I mean, 74. So we are above the 200. We are above 72.50, guys. So we have crossed back over. So now on the bullish side of things, still gonna have some resistance. Don't get me wrong, still have some resistance. But right now, buyers finally got back on top of 72.50. Finally back on 72.50. Now, what's gonna be the make or break area? Like the main thing that's gonna give us that flip. The main area that I see to give us that successful real flip to the upside, 76.50 for SPY. So I'll put it like this. You're in a range. You're going to be in a range from what I'm looking at on my 12 hour. You're going to be in a range of 76.50 down to 72.50. So, and I can show you right here, guys, on what I see on my 12 hours. So this is what I see. And damn, SPY. I mean, look at Tesla still ramping up. Look at that. Told y'all 17.50. Let's see if we get 17.50, and then we can break that. 420 you go. All right, so let me show you guys real quick. Oops. Let me show you. All right. Right about here. Okay, see. All right, so look at my 12. Let's take this bottom part off. I mean, we got a dip, but we didn't come all the way back down. We came close to it. So we in this little small range right about here. Oops. We're in this little range right about here. I thought it was raining. I'm about to say better not rain. I gotta go finish doing these grads. Yeah, so 72.50 to 76. So see the level that you can't break, and you see the area that you can't crack. So you clearly see the range that you're in right now. See upper shadow. Still have yet to break 76.50, And then down here, lower shadow, 7250. So you see the range. So you clearly see the range. So let me fix this a little bit. So this is the range. See, we starting to get a little pullback, huh? A little bit of a pullback. So yeah, see, 7650 can't break. And then here, area that you can't crack. You get dumps on down, but the bodies of the candle sit right back on top of 7250. So again, you can clearly see that. So let's kind of minimize this to see where we at, like kind of like right now. What is that? 74. So let's kind of see what this little mid area is right now. See this little area that we're having trouble with right here on SPY. You know, having a trouble breaking out, like right around this little area right here that we have an area breaking out. Yeah, about right here. What is this? What's the open on this? 28. Let me see. Yeah, so right here, I mean, look at the bodies of the candles. Up and down, up and down, up and down. It's like you're having a hard time breaking out around the 74 level to even get to 76. So you can see right here, up and down, up and down, up and down. It's like you get stuffed right here. Not the wicks. Look at the bodies of the candles. See the bodies of the candles? You get stuffed repeatedly. 74, 74, 74, 74. And then down here, you get stuffed on the downside. 72, 72, 72, 72. So it's kind of like in this little $2 range still. We're still in this little $2 range still. So let's see. If you crack 72, you will have room to possibly fall back down. So we do crack 72. What can we fall back underneath 72? Like, what would be the low areas? I mean, we still got this little bear flag pattern still setting up. Still got that bear flag pattern setting up, so don't count that out. So bear flag pattern is still setting up at this time. So underneath 72, what can you go? So 72, last time we was underneath 72, we went down as low as 67 and then back up to 72. So we right at 72 right now. So I'm looking at this old area here. Last time we was underneath 72 and how far we fell back down. Came down to 67 and then right back on up to 72. So we still haven't fell underneath it yet. Still haven't fell underneath it yet. But keep in mind, watch 72. 72 is going to be crucial on both sides. Buyers, you have to stay above 72. Puts, you got to crack 72. Because that's going to be your floor. I mean, look right here. Red to green, back on up. Red to green, back on up. Look, it's like you have sellers have a hard time cracking, but they may try to go for it because you do have a bear flag pattern. You do have a little bear flag pattern still. You have a bear flag pattern still right in front of you. Look at this engulfing red candle. And then this is what I see. I told you, I knew we had room to go up towards that 74. Because you remember I told you right around that 200-day moving average. So let's see. Alright, so right here, look. I see this, and again, we cracked that 72.50, possibly this, where you go for that second leg on down. So it's like one leg, consolidation, second leg. That's what I see. You know, we cracked 72.50. That's why I said that's going to be key. Because that's the only thing that's holding you up still is 72.50. Because if we can crack it, that's going to create that second leg down. When you'll go further down this way. That'll be leg number 2. Because again, you got an engulfing red candle, and you have a bear flag. Even if you look at it from this point, you still have a bear flag pattern right underneath 74. Back on down. So I do see that setup. See? Look right here in real time. Look. 72.50, right? You got an engulfing red candle still. You got this this H-like pattern. You got this bear flag pattern that's right in front of you. The only thing that's holding it is 72.50. If that bad boy cracks 72.50, then yes, you'll fall back down to the 71s, down to the 70s, where you'll get that second leg down. See, the only thing that's stopping you right now is 72.50. But when you crack it, that's going to turn into resistance and more downside is coming. But see how the buyers is trying to hold it? See how it's battling right at 72.50? They're trying to stop the sellers from taking it out. So you can clearly see where they're trying to stop the sellers, and you can clearly see where the sellers are trying to stop the buyers. 74, sellers. 72, buyers. But if sellers come in aggressive, I'm telling you, that second leg coming on down. I mean, we pull back down in pre-market. Don't get that twisted. And early intraday. But as you fall back on these 72 guys, I mean, that's gonna kick us out of this range. That's gonna kick us out of this range here. Now back down into a lower range. So that's the only thing that's stopping the play from falling is that 72.50 because buyers are desperately trying to hold that key level. They're desperately. I mean, y'all can see it with your own 2 eyes. Y'all can clearly see this look where the candles keep getting stuffed at. Look right here. Where it's consolidating at. Look right here. Having a hard time breaking out. Having a hard time cracking. 74, 72. Right there. So y'all can clearly see right there what it's doing. See what I mean? 72.50. So even on the 5, I mean, all we did was put the piece of the puzzle together. That's all we did. Let's see. You never look on the 5-year time frame? 5-year? Look at the 5-year time frame. Let's try to get everything confirmed. Everything confirmed. For its 5-year time frame, look like we on the last week's area where we closed out at. Still looking a little weak. Still above, still getting a little somewhat overextended off of that 13 EMA with room to fall to the 13 EMA. That's at what? 70. What is that? What's that? 62. So back down this way at 62, put you back down to this trend line. So that'll yank you back down to the 60s. I mean, right here after we hit that red trend line, I told y'all how powerful that red trend line was. Because like I told you, look what happened last time we hit that in 2021, 2022. Last time we went up, closing out 2021 into 2022, what happened? Bear market. 2022 was a bear market. So the question is, now that we see this in the past, 2021, 2022, could we see a repeat of this 2025 into 2026? Because we hitting that red trend line again. See that? We hitting that red trend line again, crossing from 2025 into 2026. So the question is, could we see a repeat? And again, another thing I was telling you guys that I was concerned about was that we never got that hefty pullback yet, back down to this old breakout zone yet. After we broke out above 610, we went up, but we never came back down and retest this level. And then nothing is wrong with a healthy pullback, because buy low, sell high. But we just been up at the highs, still yet to pull back to the lows. So, and think about it. Okay, look, if I'm talking BS, let's just say, okay, say for instance, man, this boy, he don't know what he's talking about. Okay, let's take 2021, 2022's resistance, right? Where my green line is at, right? What price point was that? 480, right? 2021, 2022. Then we go into 2023, 2024, 2025. 3 years after, what did we pull back down to? 480, right? We got that hefty pull all the way back down to that green trend line. And that took how long for us to get back there? Damn near, 2 years? And then we finally got that hefty pullback on this one, this old breakout zone. So as we now create a new one, we haven't yet to pull back down to this one. Now y'all see what I'm saying? So we haven't yet to pull back down to this new breakout area, which is around 610. So that's what's making me a little concerned. Like, when will we get the strong pullback down that way? That's the only thing. Because we already getting topped out and we already getting stuffed right at this trend line, right around, the 490s, 690, 680s. See? We keep getting stuffed over and over and over and over again. So it's like, when are we going to get that? When is that strong pullback coming? When is that strong pullback going to actually yank us back down this way? Because, see, last time when we had this strong pullback, we got oversold. We pulled back down, especially on the RSI, to the oversold position, and then wind up having room to go back to the overbought position. See, that's when that healthy pullback occurred, which was right here. Caused that to get oversold, for a buying opportunity to go right back on up. But see, right here, we just kind of coasting. We kind of coasted right in the 60s and 70s. But I wouldn't mind a deep pullback down where we can get a little cool off. Get somewhat of a little cool off on SPY and then rebound. So in other words, this, guys, is what I'm saying. I mean, I know it sounds like a lot what I'm saying, but this is what I'm talking about. Look, let me break it down real quick. So take this old breakout level, 610. Pull back this way where the 50 SMA is sitting at, right? And where your trend line is at. For a possible trend line indicator bounce. Now y'all get what I'm saying? That is what I'm talking about. Get that dump down, pull back, retest this level now on the upside instead of the downside, because when you were underneath 610, that was a strong resistance. Now back above 610, now we can utilize that for support for the move. Now y'all get where I'm getting at with this? Now y'all get it? Y'all get it now? Where I'm getting at, where I'm trying to go with that? So that's why I'm asking. I'm like, when are we going to get that pull back down this way first before a possible strong bounce back up is what I'm trying to get at. Now, another thing I can see too, looking at this, where we at right now, SPY? 71 still. I'm going to put everything back. I can see two different type of, I can see an uptrend this way, and I can also see another pattern the other way. I can also see if we was to have a bear market in like just say for instance 26 was to have a bear market, and we have to fall back underneath that, back down this way. Huh. I can see it from two standpoints, all at that 610 level. So if we were to have a bear market, I can see it. I can see the setup for a possible bear market in 2026. But if that 610 holds and goes back up, so I can see it from two standpoints. I can see it from a sell-off standpoint, and I can see it also from a bullish standpoint if 610 was to hold and then we bounce back up towards this key level. So I can see it from two standpoints. But if we see a repeat of 2021 and 2022, you know, going from 2025 to 2026, that means that this should be happening. If that's the case, when we crack underneath that, this way, back down, almost something like that to that nature. I'm not saying we're gonna go all the way back down, but it's back down almost into the fives, almost something like this. If we was to get a sell-off in 2026, I could see that all stemming from that red trend line. From that red trend line. Back on down. It's gonna be interesting to see where we go, guys. So from the level that we at right now, back down to that 610, yeah, it's gonna be interesting. Cause you gotta think about it as a range. So tops, and then we have these potential bottoms. If we get that hard pull back down this way. Cause we haven't came back down to test this level yet. We still testing around this area, but we haven't yanked back yet. So yeah, it's gonna be interesting to see where we go from here. It's going to be interesting to see where we go from here, guys. So, okay, let me ask you guys, what you guys think? So, again, it's not just about me. What you guys think? Do you think that we can finally break out of this red trend line and create new highs going into 2026? Or do you think this is going to be the top as we cross over to 2026 for that pullback down? So, what do you guys think? I'm asking you guys this. What do you guys thought process after me breaking this down? What do you guys think? So, do you think we can re-break this trend line? This strong trend line that has held before, that caused a bear market. Do you think we can finally break above this red trend line and actually create create new highs? Or do you think, we can see a rinse and repeat 2021, 2022 for 2025, 2026? So what do you guys think? It's a 2K scenario. 2K scenario. I mean, look what happened last time. Ran up toward that red trend line. The next year over, we caught a bearish market. So what do you guys think? I mean, do you think, once we cross over 2026, we see somewhat of a little bearish market, we get a nice little pullback down this way? Or do you think we're going to have a strong push that can break us out of that trend line finally and put us into the 700s? So what do you guys think? I'm just asking you guys. Me personally, I think it's just me. I could be wrong. I think we're going to be setting up for a pullback coming. I think that we're going to top out again. I think we're going to top around, I think that 680, 690, I think that was the tops for 2025 for right now. I think that was the tops. And I think that we're going to start to yank back on down. I honestly think that's just my opinion. To me, nothing is wrong with that, because the market needs to cool off. Because the market can't go up forever, it can't go up forever. It has to have a cool off period. I mean, like I said, and we had that when we pulled back down here. In early 2025, we pulled all the way back down to the old breakout area, 480, then back on up. So, I just honestly think that we may be topping out, playing around these tops right now. I really think that 690, 680 was the tops. Again, I could be wrong, but that's just my opinion. I think that's it, and I think we about to start slowly falling back down. Cause look where we at, Lou, and we fell on these. See what I mean? Look how the price is getting weak. Look, 671, 670. See? That means you're back underneath the 670, 250, right? So that means you 9 times out of 10, what? Fall into the 60s. So that means that you're losing leverage. 90, no longer there. 80s, no longer there. 70s, no longer there. Now falling slowly into possibly the 60s, where you start to fall back down this way. So I think my theory is correct. I'm gonna stick with it. I mean, look at this. I'm gonna stick with it. And I told y'all, 200-day moving average, boom, there you go. There it is. I'm going to stick with that. I still think a possible bear, we're going to have some type of strong pullback towards that 610 coming. I can't tell you when. I don't know when. But I do think it may be gearing up because, I mean, Now we fighting the 670s, possibly falling back down to the 660s, like just slowly losing leverage. And then look at your puts. Puts still strong bounce back up. Calls going right back on down. So I believe that. I believe that deeply in my heart. What's up, NS? What's up, boss? So I think so. I think some more. We're gonna have that sell off soon coming. So I'm just telling you guys what to be prepared for.
Chubalicious 69 says, "Want me to drop it?"
Ooh, Oracle. but I mean, we slowly doing it. I mean, if you think about it, matter of fact, let me go to my 30-minute time frame. We already slowly doing it, like, cause we already fighting the 670s. Remember, guys, 672s. You know, we may bounce on up, but keep in mind, watch that level. Remember, I told you we can go up to us that 200 moving average, which we did, right? We did that 200-day moving average, which I told you that was gonna put us around 673.50, 674, which we did, and then started to pull right back on down. Told you, you pivot. 672.50. Now you back underneath it. So, the question is, once we go up to 672.50, is that going to be the start of a possible little intraday downtrend when you start to build lower highs? We already got these highs here, but could this start to build a lower high, you know, due to the fact that sellers may move down to this level and block these buyers? The market is still looking a little weak.
Intermitary says, "I saw your pic with your kids, man. What a great family you have made. God bless you guys."
Man, Ines, thank you so much, man. And that's why, and I do apologize to you guys on why I didn't post nothing, post my my thing for you know, my Patreon members and all that. Like I would normally do on Spy, because I was spending time with my family, man. And I do apologize about that. But yeah, I didn't know my kids called, they wanted to spend time with me, so I had to put them first, man. So I definitely wanted to put my kids first and spend as much time with them as I possibly could. So I do apologize by not updating that. So that's why I came on early this morning to, you know, break down everything, guys. So matter of fact, let me use my 30-minute time frame real quick. Let's see where we at. Let me see if we can try to figure out, you know, the rest of this week on what we could possibly gear up for. So right now we know that we back underneath 672.50. We already back underneath that. We know that. Okay. Excuse me. So let's look at the 30-minute time frame. All right, 30 minutes. Okay, let's see, can we get a deeper look? See what we can see anything. 30 minutes. All right, let's see. All right, let me go out a little bit. Ooh, yeah. Ooh, yeah. I mean, guys, look. Caution, guys, keep in mind, this is the new week. Monday, Tuesday, Wednesday, Thursday, Friday. So look at this setup from last week before last. The setup already occurring. Look at this. So we already fell out of this rank. Ooh, so hold up. So that means, do I need to get rid of this and start a new one? I might need to get rid of this old setup here, and not put a downtrend setup possibly. Let's see. Let me scroll up. Oops. Let me scroll over just a little bit more. Let me make sure. This is a 30-minute time frame, guys. So we got a cup, inverted cup. Ooh, and a handle. Oops, sorry about that. And a handle. And this was all last week, guys. Remember that Friday we had that bounce last week, right? Friday bounce, and then we went into Monday, Tuesday, Wednesday, Thursday, Friday. We dumped on down. That was last Friday, going into Monday. I'm sorry, I said the wrong damn days. What was that? Friday bounce, right? Friday, Monday, Tuesday, Wednesday, Thursday. Yeah, Friday. Yeah, Friday. Friday and then Monday. Today's Monday. And look at the setup. Okay, guys, what y'all see right there? Well, I mean, what pattern do y'all pretty much see? I ain't saying nothing. What pattern do y'all pretty much see? And we back underneath the 200-day moving average. I see it. Do y'all see it? What pattern do y'all see? As we go into this new week. Because today is Monday. Monday, Tuesday, Wednesday, Thursday, Friday, so forth. But overall, what pattern do y'all see, with all this combined? What pattern do y'all see? I want to see if y'all can call it. What y'all see? I see it. I definitely see it. Let me scroll over a little bit more. My apologies. All right, this way. All right, y'all see it? What pattern do y'all see? What pattern is that?
Jtraedz says, H.
Yeah, you do have an ace, but look at the overall thing. Look at starting from Friday. Nadia, starting from Friday all the way to where we're at now. That's it. Yep. Shout out. Yep. Look at that. Yep. Shout out to y'all. Yeah. That's it. See that? Inverted cup and handle. So that means that we fall back underneath 72.50. Remember, today's Monday. that we have room to possibly fall back down, because that'll be your handle back down this way. So you have an inverted cup. Remember, that was last week setup, going into now this week's setup. So look at this. All this bad boy did was make a huge inverted cup and a handle, and you now underneath that 200. Ooh. So let's see.
Jtraedz
Great job though. Great call on that.
Inverted cups.
Great call on that.
Enzermateri says SPY is weak overall.
Yep. Great call on that. Great call. Great call. You see how we doing this together, guys? See that? Y'all thinking too. Look at this. Y'all working with me. See? So I see a little, I see an inverted cup and handle. I do see that. So again, that's why I told you that 7250 is going to be key, because back underneath that 7250, you'll start to get that downtrend. And we could also utilize pre-markets today. Matter of fact, let's see. We could possibly use pre-market setup to see if we can see a higher low build from these tops back down this way, almost creating like almost a cup and handle pattern even within this little range too. But I still see weakness overall. I see weakness. But we'll definitely keep it on watch though. But that 7250 is going, I'm telling you, 7250 is going to be key, guys. I'm telling you. Again, for longs, if you get above 7250, yes, you can push your way back up. 74, 76, and so forth. Back up to these key areas here. We can go up to the 30-minute 200 moving average, which is way up here, right? But 7250, that's why that needs to hold. Below 7250, that means you have way more room to fall back down to the open. We're right here, all the way back down into even the 60s. So that means that sellers will finally succeed kicking buyers out of the 70s. I mean, you're not too far, because look where you're at, 71.30s. So you about damn near almost $2, about $1 away. Look at this. I mean, it's a slow fade. Look right here. Even if you take Friday's bottoms going into today, it's like a slow little fade on down. So 72.50, as long as you close that candle successfully underneath that. Well, what we got left on this candle? About 12 minutes? Yeah, about 12 minutes. About 12 minutes. 12 minutes, 12 minutes. To see as long as those sellers can keep those buys underneath that 72, 72.50. I mean, that's going to be resistance within itself. But overall, I do see an inverted cup and handle though. I do see that crap. Definitely see an big old inverted cup. I do see that like big as day. Like, I mean, y'all saw it too. Now y'all get to finally see it. See right here. For those who can't see it. Bam. 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 I see that big, huge inverted cup and handle. So that means that we need to start to slowly, we need to start taking these levels out. 72.50, stay underneath. Next key level, 70. Put you back down to the 78s. All the way down, like pretty much just back down this way. Towards the 61s. Basically something like that. So that means we need to take out a few little key areas before we get all the way back down to these bottoms. So yeah, to get that completion of that inverted cup and handle pattern, yeah. Again, stay underneath 72.50. Next level, take out 70. From that level, 78s, 76, 66, and so forth. We'll get this continuation downtrend. So it's just a slow little mover. But I mean, look where we at. Oops, 70. What I told you. Look. I'm looking right there on the 30. You can't make this up. You can't make this up. I mean, I gave y'all the heads up. I told y'all, man, we broke down everything. I say weakness. I broke down a 5-year chart, 12-hour chart. I mean, whatever the chart you want me to break down. I mean, we broke it all down to a science. I mean, this is up to y'all guys now. I mean, I'm giving y'all the keys. I'm giving y'all the keys to the car. Y'all just got to drive it now. Y'all got to drive this bad boy now. I done did everything I could. I did everything. I broke everything down that I could, guys. Now it's up to y'all. Y'all got this, man. Y'all got this. Y'all got this. I believe in y'all. Y'all got this. Y'all got this, man. Let's just stay focused.
69 says, you don't play with FVGs.
What the?
Jtraedz says, 4 SPY to 670.50, maybe to 662.
Wait, what's FV? Well, don't get me wrong, Chubb. That's my fault. What is FVGs? What is that? And my bad. I mean, at least I'm not ashamed to ask what it is. What is that? FVGs? I do.
Delicious 69 says.
Oh.
Fair value gaps.
I go go for indicators. I mean, honestly, that's, and I go for gaps too. You talking about like gap fills, like gap closes, like gap ups, gap downs, that type? Yeah, I go for that too. Yeah, I do that too. Now, no, but normally on the 5 minute, like 5 minute time frames, I go for indicators. So like this morning, we held, and I told people this. Yeah. So well. Yeah, now I'll do that. Now I'll do my I'll base it off of my like 5-year chart, 12-hour chart, and so forth. You know, where you have a bigger time frame. Yeah, I do that. But when it comes down to a 5-minute time frame, Chubb, I'll normally go. I'll utilize the indicators. So I did that this morning. You can ask everybody who witnessed me do it. So once we got that bounce on up, I said, guys, watch the 9 MA, watch the 20 MA. I said, as long as you get above that price point, those indicators, you have room to go up to the 50 SMA. I say the 50 SMA, that'll put you towards, guys, y'all's my witness. Did I not say that? I said we got above the 9 MA, 20 MA. We had a gap fill to go up on those indicators towards the 50 SMA, right? I said that's going to put you around 72, 72, 50. I said if they can successfully get above those indicators, I said we can break above that 50, then we have room to go up to the 200 moving average, which is going to put you around what? 73.50 up to 74. Did I not? All that I called out did not happen? I'll go to it. Right here. I called it out. I called that little bouncing area since the bounce area this morning for those who are going long on it. So right here, Chubb, see, we got over the 50, got over the 9 MA, 20 MA. I say cool. Next key level, guys.
69 says, you did, bro. Wish I took a put there.
No, no. But think about it is, boss is still a fighting chance. Don't get me wrong, Chubb, because you still need the 200-day moving average, and now you're underneath that pivot point, which is 672.50. So this one you just went up to 73.50. So the question is now, can we start to build down? So 73.50, 72.50, 71, 71, basically back down to the 670s. So I mean, it's still you still have an opportunity, boss. I mean, so don't count it out, because again, you're still underneath those indicators. I mean, underneath the 200. You have room to run up to the 200, which is my gray line, and then back on down. So this morning, as I told people on the upside, I said, once you got above the 9 and the 20, I said, guys, we may have an indicator gap fill. I said, from those indicators, you have room to go up towards the 50 SMA, which should put you around 672, 672.50, which is your pivot point, which we did. Remember, that's when I said the bull flag pattern. I said bull flag pattern right here, guys. I said, as long as those buys can hold, create that short squeeze, trap those bears. I said, guys, we have room to go up towards the 200-day moving average, which should put you around 673.50 to 674. We didn't get all the way to 674, but we did hit 673.50 and that 200-day moving average, and then we came right back on down. So I did call that. So I did call that level. But yeah, okay, Chubb, what charts do you use? What platform do you use? Do you use TOS? Yeah, because you went up, and like I said, hit that 200 and then right back on down. So right now, I mean, 200. So as of now, you're underneath.
Chubbalicious 69.
Okay, Robin Hood. I mean, you don't have to keep it, but you could try just to see how it looks. Okay, on your 5-minute time frame, use the 200, not EMA, but the 200 SMA. On your 5-minute time frame, just to kind of see how it looks, to see if it lines up, kind of like with mine's. So mine's lined up right here, right where the market, right where SPY went to my 200, got rejected, right back on down. Because you can use that too as well. That works pretty decent as well, because the 200 and the VWAP works pretty well together, for short squeezes up and not short squeezes up, but squeezes up and squeezes down. So it works pretty fairly. So from right now, guys, you already got rejected at 200, right? Resistance, that's done. Back underneath 672, resistance, that's done. Back underneath the VWAP and the 50 SMA. Because the reason why I'm calling these ones, because these are your strongest ones. Your 200 is your strongest, your VWAP, of course, and then your 50. Now look where you're at. You're underneath that. Now follow back underneath what? 9 MA and 20 MA. See that? Now you lost all the indicators. So that means that if you're going down on the calls, you should be going up on your puts. So now look at the put side, right? Remember, this is my chart upside down from a put standpoint. So that means that SPY calls are falling. That means your put should be going on up. So that next key level is going to be possibly around 77.50. Now, the reason why I'm calling that, because I think that was Friday area where we fell from, or where we bounced at. See that bounce, that equal to a resistance on your puts, because that means buyers utilize 76. I'm sorry, 67.50 for a bounce. So that means that you have these two key levels that we need to take out going back down. So that means that we need to take out 67.50, and that means you need to take out this 64th level, and that's based off of Friday's movement. So let's make. So we already got 67.50 back down this way. So let's see. Yes, I know we ain't to it yet. So that means we need to take out 67.50, which I got that lined up with my puts. And what was the other one? So that means we're going to need to crack out of this range just to get to this level. Because everything is working against you. I mean, you're underneath the VWAP. You're underneath 72.50. Kind of consolidating a little bit, but it is still weak. Still showing a little bit of weakness. As long as you stay underneath the VWAP, stay underneath 72.50, I mean, like I said, we can see more pullback coming. So even as they push back on up towards the upside to try to go for another push, stay underneath 72.50 shorts. So, excuse me, that's the thing. You got to stay underneath it. You got to stay underneath 72.50, your pivot point, where we have room to fall back down. Because again, if we go back off of my 12-hour chart, underneath 72.50 on how far you can fall, remember on here, as long as we stay underneath it, remember we did our research on this bad boy. 72.50. See, last time we stayed right here, this white line right here. Last time we underneath 72.50, you fell down as low as 67, down to the lows of 74s. I'm sorry, 64s. Then you bounce right back on up. So that's why you need to stay underneath 72.50. As long as you stay underneath that, you have a lot of room to fall back down to the downside. Basically in this little range right here. You can clearly see it right here too. Look, if I move it over a little bit, look at this little range. See, 72.50, 67. 72.50, got a little push, towards the upside, but you fell back underneath 72, and then you fell back down. See that? See the little old range? Top 72.50, bottom around 67. So go back this way. We want to fall back in that range. See that? So we want to turn this. We want to turn this back into this, but on the downside, because we want to go back down this way. And then, like I said, because the way this is setting up for a big, huge ass bear flag pattern. And it could be, a second leg. Because you already got one leg here. And then consolidation. And then possibly going for that second leg down. So, we could see more pullback coming. Especially staying underneath 72. 72.50, that you already know how these candles go. These are 1 o'clock candles. So, especially if we stay underneath that and close out, 72.50 going to go back into being resistance. So, the only thing you can work around is the space down this way. So that means, back underneath 70s, down to the 67s. Back into this old range here. Last time we fell out of that range, we dropped all the way back down, even lower. That was like all the way to the 650s. Then you wind up bouncing your way back on up. But that was on the upside. Now we may be creating a downside. So keep it on watch to see on what we're going to do, guys. We'll see. But we know like I said, as long as sellers can keep buys underneath 72.50, that's kicking them out of this range. So that's, you have no worries on that, because that means 72.50 is going to be resistance. So we no longer have to worry about this range again. Now we have to focus on the lower range underneath 72.50 back down this way. So that means we'll go from this range here to now this range. This is what you want to do on the short side. This is what you want to do. So this is what you want to do. So you want to fall back, in other words. So you want to stay out of this range because you want to go back up if you're going short. You want to now stay in this range here. 62.50s. So I'm sorry, 72.50s, back down this way. That's what you want to do. So we want to go back to this old range from what month was this? October. October, you went back and forth, and then you wind up getting that dump all the way back down. So that's what you kind of want to repeat in the same sense. You want to kind of back and forth, but keep those sellers underneath 72. Buys underneath 72 and yank them. That's what you want to do. Because they have a bear flag pattern. Bear flag pattern, H pattern, however you want to look at it. But that 72.50, I'm telling you, that's going to be the main focus, 72.50. Because you don't want them to hold that floor. If they hold that floor, that means it's going to go sideways. It's going to go sideways. Buyers going to still have 72.50 trying to go back up. But as long as sellers can stay underneath that, more pullback coming. More pullback is coming. So I'm just letting you guys aware of it. Again, big bear flag pattern right in front of you. Stay underneath 72 with more room to fall back down. So we want to keep the body of that candle underneath. We do not want to go back up. We want to see more downside. So the first half of this market candle, which closes at 1 o'clock, make sure we stay underneath that one. We stay underneath that price point, 72.50. Because the only thing that's going to happen, I'm going to tell you what's going to happen. It's going to be a pain in the ass. I'm going to tell you right now what's going to happen. If they so happen to close back on top of 72.50, you're going to be right back in this range, right back in this little somewhat choppiness until it makes a true decision. That's pretty much it. You're going to be back chopping back and forth. Chop, 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 chop. You don't want to go through that. And I know it's a headache, it's a pain in the ass. That's one of the things most traders hate. It's the choppiness. You want to get out of that little mini range. You want to stay out of that because you don't want to go through that. You want to see either a movement down or a movement up. But the way this is setting up, we want to definitely see a movement down. Now again, 71.90s. So sellers kick the buyers out of these 72. We don't want to get them back close to 72.50. We want to go down 50 cents down. 72s. Next key level you want to go down 71.50. 71.50. 71s. You want to start to creep your way closer and closer to 70s. So right now, sellers, you can clearly see my prices going up and down. But you can clearly see the prices are trying to fall underneath 72. See right there, it's battling back and forth. So buyers already lost 72.50. Now sellers need to take out 72. Get them out of 72s. Get them away from it. Now go down into 71.50s. And look right here. So 71.70s. 71.70s. There we go. 71.60s. See what I mean? Come on, man. You gotta have fun calling this stuff, man. You gotta have fun calling this. And I just did that off a 12-hour chart. By just looking at the prices. Because, I know the levels. And now go back on the 5. Same exact thing. I know the prices. See? 71.50. Underneath 71.50. Bam. 71s. Okay. After we get kicked out of 71s. What's next? Let me ask you. Okay, what's next? If you're on the short side, what's next? What's the next price? What's the next price? What's the next one? Y'all should know. Y'all should have this locked in right now. Y'all should have it locked in. What's the next one? What's the next one? What's the next price? I'm waiting, guys. Come on. After 71, what's the next move? What's the next one they're going to? What's the next intended target? What's the next intended target they're going to? Come on, man. Y'all know this, man. We've been doing this for so long. Come on, Chubb, Nadia. One of y'all got to answer. What is it? What is it, guys? What is it? As we pull it back down, what's the next area? I got it. I do it. I got it. I got this. 71, 70, 50, man. 70, 50. Y'all ain't got to be afraid to answer. I got it. There you go. Right where we at. 70, 50. Because, okay, Chubb, on the 5 minute, we got to think about 50 cent. We got to think about 50 cent increments. 50 cent increments, babe. Because you're slowly just trying to kick buyers out. No.
I'm scared, LOL.
No. The fact is you're already underneath 70, 72.50. That's good. Okay, now you go from 72.50s to 72s. 72s, 71.50. 71.50s, 71s. 70.50s, down, and so forth. So that's what it is. And what did we hit and go back up? 71.50. I told you that's where it's going. I get so used to these prices. Like I said, and that's the thing about it, guys, when I say don't try to take on too many. And you did have 72, but I'll give you that. 7, you did have bounced at 7. But I knew it was going to come down as low as 70.50. I knew that was coming. Price. Let me put it. I'm going to put 50 because, all right, so 70.50. And you said 70. So still close. It's still close. Who said 70.50? Who said 70? Taylor, shout out to you. You did call that. So you was right by me. So that's still a good call. Shout out to you on that. But I told y'all 70.50. I told you it's going by 50 cent increments. I told you. I told you 70 is going by increments. But if y'all notice, even though we still losing leverage, 72.50, 72, 71.50, 71, 70.50. So 70.50. Okay, what's next after that? What's next after 70.50? Where we going from that point? Once we crack. So right now gonna get a little bit of consolidation, but it's still weak. Still need the VWAP. Everything's still looking a little weak. So right now your main area, 72.50. As long as you stay underneath that, that's your main key. More downside is coming. No matter how much they consolidate, keep them underneath 72.50. It don't matter how much they consolidate. But yeah, but you see how easily I read that? I mean, it's just not, it's like, that's why I tell you guys, don't take on too many stocks, because you got to understand every stock. And what I told y'all about Tesla, where I drew my line at on Tesla before 420. Tell her, didn't I not call that? Sure. Lucky, didn't I not call that for Tesla as well? How did I know this? How did I know a price area where it's gonna get interrupted before you hit 420? How did I know this? Think about it. I'm not guessing this stuff. I'm talking about I'm right on Tesla. Oops, yeah. How did I know to draw a price point right at 1750? How did I know that? How did I know to put a price point there before we go to 420? How did I know that was gonna be that area? And y'all saw me put my line there already. How did I know this? Because I don't take on too many charts, man. I stay in the blue chip realm, but I stick to the ones that I know. And this is me. Everybody's different, but I stick to the ones I know. And I told you guys, when it comes down to Tesla likes to move by $5 increments. SPY, normally, sometimes out of 10, you move by $2 increments. Think about it. 74, 72s, 70s. Even though it's like all perfectly, but look where the numbers are matching up with. Even numbers. 74s. I mean, think about it. What did we get rejected at? 88s, 86, 84s, 82s, 80s, back in the 70s, 76, 74s, 72s. Now, I mean, y'all get it? So that's why, I mean, it's like once you start to understand the personalities of a man, you become less, you'll put less on yourself. Look, even number, right? 76, 76.50, 76, back on down. See, I mean, but you see what I mean? I mean, it's not gonna always be perfect, but once you understand the personality of these stocks, man, it's easy. Like I said, I barely even trade Tesla, and look how I already had it set up, and look how the way it's moving off of my prices. We got rejected where? 417.50. Cause I take my time to understand each personality of these stocks. Like, okay, Google, I want to say Meta too. Google, Meta, Microsoft, AMD, Apple, Amazon, I think like moving, I know they, on a normal basis, they move by like somewhat $2 increments on up. SPY does the same exact thing. The only one that moves by $5 increments is Tesla. Tesla moves by fives. I've been telling you guys this for the longest. I've been lucky. Chubb, how long I've been saying about Tesla moving in $5 increments? How long I've been preaching that? About $5 increments on that bad boy. I've been preaching that for the longest, right? And look where we at. I mean, again, and look where I put my lines at. I called that level before we even hit.
W5TD says.
Hey, for real, Lucky, you my witness. Lucky, you my witness. Cause when exactly, guys, y'all know this because when we like this morning when I went to my list, I say, ooh, Tesla's on the move. I said, man, as long as you hold 410, next key level is 415. What did we run up to? 415. And then before that, I said, and what did I put? Instead of saying, oh, we're going straight up to 420, what did I put? 417.50. Because I know the insides of them. Like I know like the little micro areas. I mean, I'm just used to it. Like, okay, from 415 down to 410, you got a mid area of 412.50. On up, 415 up to 420, you got a mid area 417.50. Just like if we was to break above 420 up to 420, what is 425? You're gonna have a mid area of 422.50. And it's not just me. Look the chart. I didn't make these lines. The lines are making themselves too, and they're agreeing with me, right? The lines made themselves too. Look, 1250, 1750. They do them too. And look, bam, 70.50. So what's next? We need to go down to what? 70. So okay, come on, 70. That's gonna pull us back down to the old bounce, the old lows in the open, right? Okay, here we go. So excuse me. So all right, 70.50. Stay underneath that. Next key level is gonna be 70. Because I told you, they slowly just trying to kick the buys out of, again, all they're doing is trying to move them down. So they're trying to kick him into the 660s. Now the only tough area of 660 we already know that's gonna be the toughest demand zone. That's gonna be around that 62, 63 area, because that was where those Friday bounces was at. So we know where the tough demand zone is gonna be at. We know this for sure. That tough area is gonna be at. 15. So now right now spy Tesla's underneath 415. We get a little pullback. Let's put a little price point right around 1250. On the downside, if we crack underneath it, let's see. I'll get that pullback to it. Let's see. 1250. Wait, did I make a duplicate copy? Oh, I did make a duplicate. Alright, make sure I make a duplicate copy. So just watch that level. Watch. Alright. Watch that way. So underneath 15, you got this little area here you're going to have first before you go all the way back down to 10. So 15, you're going to have a little bit of interruption at 1250. And then, again, we get a strong pull. Then you go down to 410. But if they go for a little bounce, they're going to try to utilize this one back up to 415. So keep that on watch. All right. SPY. Back to SPY. 70.50. What we talked about. From 70.50 on down, 70. From that key level, now you're going into the 69s. 69.50, 69, 68.50, 68. It's just slowly creeping its way on down. And again, let's also look at our 30-minute time frame. So we know we need that crack. So let's look at the 30-minute. And then also, guys, if you're all on the shorts. And another thing, and Chubb, I know you're talking about you were scared. I know you're talking about you were scared to trade these levels. Flip your chart upside down. This is SPY, but upside down from a put standpoint. So all you gotta do is just read your so you know how to read patterns, right? On the correct side. It's the same exact thing even on the chart upside down. So, because again, all your puts is gonna do is the opposite of what the calls are doing. So if the calls are going down, your puts are going up. Just like, okay, put it like this, Chubb. Just like you got that pullback underneath my 200-day moving average, that equal to a bounce on your puts. You see that? Right where my gray line is at on the call side, when you got rejected at, that was around 73.50. Then you got a bounce right off that 200 on the put side. So you could have utilized that to going up. Because again, all you're doing is playing the numbers in reverse. You're playing the numbers in reverse is all you're doing. So that resistance.
Chubbalicious 69 says. Yet I need to flip the laptop upside down from now. No. All you do is put a minus sign, boss. Put a minus sign. It should flip it. It should flip your chart upside down to the opposite. So yeah. So right here at 73.50. Like I said, right where that 200-day was, that resistance on the calls equal to the put support back on up on its end. That's it. Because it's just doing the opposite. So right here, and look, how did I know this area? How did I know to put this area on where the buyers were going to react on? 70.50, right? Look what the body of the candle is. Again, I don't make this stuff up. I don't make these numbers up. It's like I just psychologically know these levels. I'm so used to SPY. Because look where your buyers are coming in at. Yeah, we got a lower shadow, but look where the body of the candle recovered at. 70.50. See what I mean? So it's like I'm just used to these levels. I don't know. I'm just used to them. I can't. It's hard for me to break it down because I guess I just dealt with it for so long. I'm just used to it. It's like second nature to me. All right, back on top of 15. All right, we can go all the way back down. Yeah, so 15, right back on 15. Still got this little uptrend building. Do we have a little bull flag pattern on Tesla? Oh yeah, we do have a little bull flag pattern. Yeah, I just noticed that we do have a bull flag pattern. Because if you merge these candles together, they give you one engulfing green candle, and you do have like a little that give you a flag. So yeah, there would be somewhat of a bull flag pattern. Because if you take a 30-minute time frame, it should merge them together, or close to it. Nah, did it? Yep, bam. Told you. Chubb, look. Go to your 30-minute time frame on Tesla. Bull flag pattern like right in your face. Bull flag pattern like right in your face. That big engulf. That's why I knew when I seen it on the 5-minute time frame. I seen all those different candles. I said it should merge them. See? And when you go into a 30-minute time frame, it merges all your candles together. Now, when you go back to a 5-minute time frame, it spreads them out. See? 30-minute, it put them all together. 5 minutes, it separates them. See, watch. Let me go back to a 5-minute. See? It spreads them out. So it makes it hard to tell, but yeah, it made one big bull flag pattern. because I knew it was gonna merge all this. Because something told me. Because normally when I see consecutive green candles or even consecutive red candles, I think in my head, okay, if I think about a different time frame, like a 30-minute time frame, it should merge. That's why I said that before I went to it. So that's why once I looked at this, you remember even off of this.
69 cents. Still trying to master
So,
time frame analysis.
Yeah, but like say even off my 5-minute time frame, I just saw these consecutive green candles, and I thought in my head, I said, that looked like a bull flag pattern. Chubb, you remember I said it before I even went to a 30-minute time frame. I said it looked like a bull flag pattern just even off the 5. That's when I went to my 30-minute to confirm that. What's this thing quit moving? And I went to a 30-minute, and lo and behold, bull flag. I say, wow, what do you know? I was right. Bull flag pattern. You go off a 30-minute time frame, big solid green candle. Ain't that something? Gives you a big bull flag pattern, trying to hold at 415. So it may go for a second leg up. So you got one leg here, consolidation possibly for that second leg up if we get that break above, what price point is that? Well, 420 for sure. But that bad boy does look pretty strong, and you do have a bull flag pattern.
Chumbalicious 69 cents.
See?
Good stuff, brother.
Yeah, boss, see? I knew but once I started those consecutive green candles, something told me that, man, that's a bull flag. That's why I had to go to the 30 minutes to confirm it, to see if they was going to all merge together, all the candles. But I'm so used to doing that, sometimes on a 5-minute, I can just see it. Like, sometimes I don't even need a 30-minute. I can just see it off a 5-minute time frame. I'm just used to it. But that's why I just did it, just to confirm it to show you guys. So all I did was just use my 30-minute time frame, and I can just see it off of this. Consecutive green candle, consecutive. And I think about merging them. I already have an engulfing green candle in my head. And right here, I think about a bull flag pattern, a flag, and then there you go. So it's crazy. But like I said, I can just, I'm so used to trading, and the way I trade, I got a weird mind when it comes to these things. Like I can think of a 30-minute time frame using a 5-minute time frame, if that makes sense. Like when I see this type of things, I can merge it in my head and already know what it's about to do. It's crazy to think that, but I got a weird way of thinking. Don't judge me. Don't judge me. That's how I stay on top of my game, though. I mean, everybody's different, man. Everybody's different. Everybody trades different. Some people trade off of a 5-minute time frame. Some people trade off of a 12-hour time frame. Some people trade off of a year time frame, 6-month time frame. I mean, everybody's different. Everybody has a different preference. You know, whatever floats your boat, man, go with it. I would again, the reason why I'm so used to do, I'm good at it because I was so tired of flipping chart after chart after chart. It kind of got on my nerves, man. So damn, they go to 450. 750, bounce back up to what? 275, 7250. So right back in this little range. So you see, it's kind of like in a little range. So 670.50 held, trying to go back up to 72.50. Cause y'all already know what. Again, y'all gotta think about the market as halves. From 9:30 to what it is, 9:30 to 12:30. Yeah, 9:30 to 12:30 is like the first half, and then 30 minutes over, you'll have the second half. Well, Chubb, lucky. I don't know if y'all ever looked at the market like this, and I'm gonna show y'all what I mean. It's another trick to it. I'm gonna show you another trick. You have market halves. It's kind of like a college game. So you have a first half, you have a second half. Your first half is from 9:30 to 12:30. Your second half is from 1 o'clock to 4. Now let me show you what I mean by that. It's kind of like a somewhat of a basketball game, and I'm gonna break it down on what I mean. I'm gonna use one of the old ones. Real quick. Okay, so let me take a vertical line. So from 9:30, 12:30, yeah, about right here. So I'm gonna try to make a vertical line and kind of break it down on what I mean. Let me see if I can do it. Use a vertical line. All right. And what time is it? What time is this? It's about 1 o'clock, right? Trying to see. No, I think I went too far back. What's the 12:30? I think it's back this way. Somewhere in this little bracket. It's like a first half and a second half. I'm trying to put it towards the 12. Okay, 12:30. Okay, so this is the first half. This is the second half. So it's kind of it's like zone like split. I'm trying to put the best that I can. It's like because you're gonna have that little period. You're gonna have a 30-minute because again 9:30, 10:30, 12, 11:30, 9:30, 10:30, 11:30, 12:30. I think I got that correct. And then you do a break, and then you got 1 o'clock. Yeah, 1, 2, 3, 4, yeah. So it's 3. Yeah, okay. So yeah, that is correct. That's correct. So I think the market is halves. So in other words, I want to see how the first half is going to perform, and how the second half is going to finish it. So, like, okay, I'm trying to break this down the way that I possibly can. So, okay, you know how you have a pre-market top, a pre-market high. So, whenever I'm going into like the first half of the market, I'm thinking of an intraday top, of the intraday high, whatever, that intraday bottom. So, as the second half of the market goes in, I'm like, okay, can we take out the first half and then create a continuation up, or will we double top and then slowly come back down in a sense? So, I'm trying to find one that can perfectly stand out. I know this one not really a good one. But where you had those transitions. I'm trying to see if I can find one perfectly. If I can find one that stands out very, very perfectly. We had good transitions from like 12 to 1. Let me see if I can find a good one where I can break it down a little bit better on what I'm saying. They had a good transitional move. 12. And then you broke above this level. Almost like in this way where you transition, because the first half of the market you was like in these low areas, and then 12 or 1 o'clock roll in, you wound up breaking above that these old highs and then created new highs. But it was another one I seen that stood up a lot. Was it this one? Yep, 12 o'clock. Okay, so the first half of the market, okay, you went down, right? 12 o'clock, going into the second half, right here, and then you wind up transitioning over. Yep, buyers wind up stepping back in. Because it's always around 12, 1 o'clock where you get like some type of transition. You always get a transition especially when you're on a pullback. See, this one was like from 9:30 to 12. And then from 12 o'clock, as that new 1 o'clock candle came in. And then, okay, so then you bounced here. So what time was this? 12:15. And then you wind up transitioning over later on. It's something... I know it's hard for me to break it down, Chubb. I'm trying to do it, but it's always around like 12, 1 o'clock. You'll get like some type of transition to let us know, if we're going from bearish to bullishness or bullish to bearishness or a continuation. I'm trying to break it down as much as I can. I'm trying to break it down the best I can to show you like the transitions on what time zones. So like, okay, if you dump it on off, or you put it like this, if you're long buyers, and you're waiting for a move back up is what I'm trying to get at too. It worked both ways. Okay, say for instance you're long buys and you're just waiting on a long opportunity. You don't want to get caught in these situations like this. So normally what would happen is, you'll get down to certain key levels or certain indicators. You'll get to certain indicators at a certain time and then it reverses. So like, okay, like right here, you fell all the way out down because you got overextended at the beginning of the market, right? And you wound up falling. Then you got below the 200-day moving average, right? And then you started to slowly climb your way back on up. That was around 12 o'clock. And then as 1 o'clock approaches, you got right back on top of the 200-day. And then you wind up reversing back up. Now you see what I'm saying? How you went from red to green. So you went from sellers straight to buyers. It's like you kind of had to wait it out. You kind of had to waited for those sellers to get out. Wait for the buyers to step back on in. You fell below the 200-day moving average. Then you got back above the 200-day moving average. And your indicators. Then your indicators started to cross over. Your 9, your 20. Right back above the 200, then they got back above the 50 and the VWAP. So you notice that indicator crossover right back to the upside, like everything started to reverse. So you can clearly see how everything was working against you at one point, and then now you can see how everything was working with you at one point. So you can see how, again, you was underneath all the indicators, VWAP, 9, 20, 50, everything was underneath you, right? And the only thing that held, you got back on top of was the 200-day. After you got back on top of the 200-day, now the 9MA and the 20 started to cross back over.
69 cents. So much in the trading game, man.
Yeah, but you see it though, right? And look at the time frame. So now you see what I'm talking about on how I wait at certain times. Depending on which way I'm going. So like I said, beginning of the market, right? We was up. This was what was this? This was on the 10th. So that was we was getting hammered at like around 679. Kept getting hammered, hammered. Yeah. So okay.
Yeah, I see.
Yeah, so right then we was getting kind of overextended, right? But you had room to fall back down to the 200-day moving average. And that was around going, 10 o'clock, 11 o'clock, going into 12 o'clock. So around 12-ish, we wound up catching the bottom. Then we wind up getting back on top of 76.50 and getting us back on top of the 200-day moving average, right? Because everything else was, again, everything was working against you. Because again, you had nothing to hold you other than, natural price points itself. Because you had no indicators to hold you. The VWAP was going against you. The 50, the 20 and the 9 MA was working against you. 50 working against you. Somewhat of the 200 was working against you. But then you wind up getting that reverse. Now getting back on top. Now the 9 MA, which is normally the leader of all the indicators, because once it's the leader, the market follows, correct? Because remember, even if it's going down, it's still leading down. Notice that? So even when you crack on the ups, if you look at it upside down from a put standpoint, like I said, the 9 MA is leading downwards, right? Because the market is following it. Now look how it's slowly reversed. I'm talking about the blue line. Because normally, again, if we want to see upside, the blue indicator is normally the one on top. So after we got that transition, look at the 9. It crossed back right back above the 20. Then it crossed right back above the 50. Then it crossed right back on top of the VWAP. And look how everything came. Look how everything panned out. Look at that. Now, look at your indicators reversed. 200 back at the bottom. 50 back at the bottom. That's your strongest ones. And then now your exponential ones, your flexible ones, which is now the 20 and the 9, now got back into its rightful position. And look how the market followed. See that? And you just wait for those transitions. Now here, you fell back underneath the 50. See that? 50, 50, 50. It was kind of back and forth. But look what happened. You wind up crossing, right? You wind up finally getting the 9 to cross back on top of the VWAP. And then finally coming right back on top of the 20 MA. Became the leader once again. And look at the transition. Look at the time. Almost around, coming close to 12 o'clock right here. Because they got back on top of the VWAP. 12 o'clock. Right around 12. And then you got that transition back to the upside. So you avoided all this choppiness. Got that correction right here, right around 12 o'clock. 12 o'clock transition, right back on top of the VWAP. Bam. There you go. See that? See what I mean? But when you just take your time to just sit back to see exactly when to attack it, it's like, man, you'll see it in a clear view. That's why I use my indicators. I use it to the best of my ability, especially the VWAP. You never ever, guys, forget about your VWAP. Your VWAP is always one of your main indicators, your go-to indicators. See right here, you underneath at the beginning of the market. Underneath. You tried to break out, but what did you hit? 200-day moving average. Came back on down. Now, you didn't get a full flush, which sometimes when you see something like that, it's giving you a clear sign something's holding. Because if it was a bear market that day, after this one right here, we should have dumped on down. It should have been a continuation sell-off. Red candle, red. We should have been dumping. But notice how we stopped. We paused. We stopped right here. Right around 679, we wind up finding our way back on up, creating somewhat of a higher low. So you can also do this. Take these bottoms and draw it this. There go your uptrend. Bam, you got that set up. So take that uptrend. If you notice, you're right back on top of the VWAP. You're getting somewhat of a little indicator squeeze right at 200-day moving average with your 9 MA, and bam, look at that. So you knowing exactly right where to get in at. So instead of getting caught in all the choppiness back and forth, you're waiting for the true direction. True direction. And look at that. True direction from these bottoms. From right here. Bam. All the way up to almost close to 684. And it's all about just understanding these, each intraday. Each intraday is always going to have some type of setup, but you always find your way to the VWAP in some sense, no matter what time, what hour, whatever it is. Same here. Like I said, the one we talked about from earlier. We fell on down. 12 o'clock, because again, it was underneath all the indicators. And then you wind up getting these two healthy green candles back on up, because you no longer had a little small candles. Now you had healthy candles stepping back in, letting us know buyers were stepping back in right here. Bam. Got back above the 200-day moving average. Bam. Got a nice little pullback. Use that 76.50 for a pullback bounce. Also, again, Chubb, what do you have right here? Chubb, what else was a clear sign right here, boss? By basing off those candles, what was that possible setup right there, Chubb? What was that? That gave you another sign. That buyers were stepping back in, that buyers were taking control. After all the pullback and choppiness, that right here, buyers was taking control. What little pattern you see right there that kind of gave you a clear sign? What was that?
Chubbalicious 69 cents.
Not just a crossover. Not just a crossover. Remember, think about Tesla. Think about your 30. Remember, think about merging those two green candles together. Remember, because they are healthy green candles, right? They're not none of these choppy ones that we had down here. They're two green candles, right? Two green candles, right? So if you take those two green candles and merge them, what do you have? You have one engulfing green candle, wouldn't you? If you take that candle,
69 cents. Oh, okay.
yeah. So if you take that green candle, let me see if I can. Let me see if the cause I don't know if those gonna merge. Let me see if I can use a 10-minute. Let me see if these little arrows gonna merge. Let me see. And right now, guys, we're still falling because I'm looking at my puts on SPY. I can just look at my chart upside down and tell that we still pulling back. So that means we're still falling. What date was this? The 10th. Let me see. Do I have a 10-minute? I got a 15. Shit. Let me see. I thought I had a 10-minute. Let me go to one real quick. I just want to have 10-minute one. All right, 10 minute. Intraday, 1 day. I'm gonna use a 5-day, 10-minute, I guess, or whatever. 10-minute. All right. Let me see if it works. It's gonna be about 15 or a 10-minute. That should possibly merge these two together. Let me try. Let me see. Ah, damn. What the day was that? 14. I gotta go back a little bit. It's the 11th. Should be the next one over. Did it merge it? No, it didn't merge these. I think it spread them out. I'm gonna have to go a little bit higher then, because it's right here. It's right in this little level. Let me try 15. Ah, come on, man. I hate when this thing does this. Damn, I still can't see it, but okay, it is the 10th. I might have to go back to the 5, because 5 you can see it. I mean, 5 you can clearly see it. I mean, it was just clean and cut. I mean, you can clearly see that. Yeah, I was trying, Chubb. I was trying to merge them together, but I think because they was in a different time frame. I think that's why I couldn't merge it. That's why I couldn't merge it like I wanted to. Is this back on the 10th, the 3rd? 6. Still falling, guys. Still falling. That means your put's still going up. Put's still going up. What was that? Oh, it was right here, wasn't it? Yeah, right here. Okay. Yeah, that's why they merged. Okay, it was in a different time. It was in a different frame. Yeah. So if you notice the box, yeah. So if they would have been together, it would have merged it. The fact is that this candle closed out at 55, crossing over to 12 o'clock. That's why. If it would have been in the same box like this here, this rectangle, if that candle would have been in the same area, it would have merged it. It's because this one ended at 55, this one opened up at 12 o'clock. That's why I couldn't merge it. But you can still see it. I mean, you can still see the pattern. You can still see the pattern as you go from 11:55 to 12 o'clock. You can still see the pattern step. You still see a bull flag pattern and a pullback bounce. So, I mean, now you get what I'm saying. But you get it. So, my bad, guys. I had to go through all of that. I forgot. Because, yeah, if the candle's not in the same frame, it's not going to merge it. It's not going to merge it.
Jtraedz says, $SPY I see 669.17 support.
And I'm about to go to it right now, Queen. I got you. I'm about to go to it now. And what price point did we crack? 70.50, right? 70.50. So that means... Oops. Come on, God dog. I got that damn thing. Let me take this shit off. It's annoying. So I couldn't move it. So my bad. All right, so 70.50. Don't forget about the open. We need to crack the open. So we crack the open. That should turn your daily candle red. That should turn your daily candle red. Your 6-month candle. So it should, because right now you're above it. It's gonna be green. But the minute we crack that open, your daily candle, which is your 6 month, it should turn it red. Let me see. See, we green on the 5-year. Let me see, 6 month. Because right now, as long as we stay on top of the open, it's gonna be green. All right, 6 month daily. Yep, still red. I mean, still green for right now until we fall back below the. Once we fall back below the open, that bad boy should turn red on that bad boy. I ain't gonna lie. I really don't really like using the 6 month though. I use my 5-year. My 5-year chart, it just always worked out for me the best. It's clean and cut. I can see everything. Because those 5 years, these are weekly contracts.
weekly candles. So this is the start of this one. So this is from the 17th through the 21st. So this one was last week. So this is this week. So that means that this week is lower than last week. So that's showing weakness. So that's what that means. So even on this 5-year chart, see, these are weeklies. This was last week's. This is this week's. So that means right now, as of now, we're underneath last week's lows, right? I mean, as far as it's closed. See underneath, right? Going into this week. This is Monday's movement. We still got Tuesday, Wednesday, Thursday, Friday until we fully close this candle out. But right now, as of now, we're still looking a little weak. So, still looking a little weak with some possible room to fall back down to that 13 EMA, which is around 61, close to 62. Back down to that 13 EMA. So, to me, it still looks weak. And remember I told you guys about that red trend line. I mean, ever since we hit that red trend line, it's been red candle, red candle, red candle. But we just need, again, I wouldn't mind this dump. That's what I want. I want that dump. That's what I want. I want that solid, just solid. I mean, cracking that 13 EMA and falling back down to that 50 SMA, putting us back down to this old breakout zone. I mean, I would like that. I mean, taking a put all the way back down that way and then go for a possible call back up. Shit, I'll do it. Think I wouldn't? Why not? And look, I guess they heard me. I guess the sellers heard me. Let me shut my mouth because they like, oh, that's what you thinking? Let's pull. Let's pull it. As soon as I said it, they started pulling. I was like, shh, shut up, Jay. Don't expose it. Swear, it's like the sellers heard me and they started going. They started getting aggressive. It's like they was hearing what I'm saying. But like I said, guys, look on your puts. Like I said, look at the push chart. When your calls go down, your puts go up. Like I told you, flip your chart upside down. Play the same exact prices. Play the same exact prices. So remember I told you that next key level is going to be around 76.50. And if we crack that, the next level on down is going to be around the 74. That's that old breakout zone. So 67.50. See that? 67.50. We not too far from it. We not too far from it, guys. We not too far from that level. So I told y'all what to prepare for. I told you, just always be prepared. Always be prepared. But at least I told y'all ahead of time, so y'all know I told y'all. So y'all can't even say I didn't. Y'all cannot say I didn't warn y'all on where we could go. Y'all cannot say that we didn't. Cannot call out a inverted cup and handle pattern on a 30-minute time frame. You cannot say I didn't call out 417.50 area here. Cannot say I didn't call that out. You cannot say I didn't call out back down towards 412.50. So, I mean, come on, man. Come on, man. And look at my lines. Already set in motion. I told y'all. I told y'all, man. Your boy try to do what he can to help y'all. The best that he can. I do what I can. I mean, I can only do so much. I mean, y'all got to take control. And then I tell you, look, 417.50. Bam. Back down to 15. From that level, back down to 412.50. Right where my lines is at. Why would I make this up? And I don't even trade Tesla. And let's go back to the 30-minute time frame. Again, how we looking on that? How we looking on that inverted cup and handle? Shout out to Nadia and everybody else who did call that. And bam, and look, get more aggressive. I told y'all. Look at your puts. Trying to aim for that same exact price point. Let's see, can we get that push or that pull back down to 77.50? Still got room to keep yanking. So let's see how we're looking on the 30-minute real quick. Let's take a look. 30-minute. I want her to take a quick look. Because we called out a what? Inverted cup and handle pattern? Inverted. Just want her to take a quick look. Alright. Inverted. Come on. Where you at? There you go. Ooh! Chubb, was I lying? Lucky, was I lying? Tell her. Nadia. Look at that inverted cup, baby. Look at that handle. Where are your two bottoms at? All the way back down this way. 63, 61-ish. Where your true bottoms, where your buys came in aggressive. Damn, so are they going all the way back down to these bottoms where we started? You know, going up and then back. I mean, you do got this big inverted cup. I mean, and to complete the cup, you need to come all the way back down this way. So that means 65s back down to the 64s. To complete it, you know, to close it. And if they close it, I mean, it's two different ways it can go back down this way. Either they're going to go for a bounce back up, or are we coming for more downside? One of the two is about to happen, but we still got room to still possibly fall back down. So, I mean, look at that. I mean, guys, didn't we not call out that inverted cup and handle pattern like good? I mean, look at this. Like spot on. Downtrend still commencing. I mean, if we extend it out a little bit on the 30-minute time frame, we go to my 30. Oh, yeah, there we go. Look a little bit more better, a little bit more sharper. Yeah. Boom, boom, boom. Look at that. Downtrend setup. Thursday, Friday, Monday, just today. So we got a lower high build. We got a little downtrend pipeline going on. You can see that. Nice little pullback. Look at this. Inverted cup and handle pattern. Everything calling out bears right now. Man, come on, man. This is all I can give, man. I done gave y'all all of the keys, man. I mean, look at this. I done called out everything from a 30-minute time frame, 5-year time frame, 5-minute time frame. I done broke down everything, man. It's up to y'all what y'all do from this point. So, it's up to y'all now. Y'all got to do this. I done gave y'all the keys. I done gave y'all, everything I can give. It's up to y'all now. We done went through every time frame. It's up to y'all now. What y'all want to do from this point? What moves y'all want to make? It's your account. Y'all got to do it. And I got to soon head on out, guys, so because I got to soon be leaving in a few. So, but I broke down everything that I could while I had y'all. So, on how far we can still possibly pull back down to, and we looked at the 30-minute time frame, how far we can still pull back. Let's also look at the 12-hour time frame. One more. How far can we pull back? Remember I told y'all about that range? That 12-hour range? What did I say about that? Everything I've been calling was like coming down into existence. What I said, 72.50 back in this old little range here. What we could possibly fall back down to, 67. Come on, man, you can't make this up. You can't make this up. I swear you can't make this up. I gave y'all the keys. What else y'all want, man? What else y'all want? I done gave y'all the leverage, man. I don't know what else to give y'all. I did what I could. I did my part. Hey. I did what I could. I don't know what else y'all want from me. We called out a downtrend, inverted cup and handle pattern. Ever since 73.50, 72.50, 70.50. I don't know. I told y'all from the talks up here all the way on down. I don't know what else y'all want. I gave it to y'all. I gave y'all the keys. So it's up to y'all what y'all gonna do with it. Do we still have room to pull back? Yeah. Still got room. Like I said, look at your puts. Flip your chart upside down. Look at this. Look at this. You still holding up all the indicators on the put side. So while you call the downtrending, your puts are uptrending. So if you want to flip your chart upside down, play it from a put standpoint. See the key levels that we can push up or fall down to. Play it like that. Because we know that 67.50 is going to be one. And we know around that 64 because that's your bouncing areas where we had those strong bounces those 2 Fridays ago. So we know that's the next key area on down. So you got still a little bit more space. To still touch these key areas still. So don't count it out. I still think it's going to yank. And look, was I lying? Was I lying? I can't make this up. I'm gonna put my alert just to see if it's gonna hit it. I'm gonna put my alert just to see if we're gonna hit that bad boy. But and the reason why I'm breaking all this down, guys, and the reason why I'm doing all of this is because, okay, especially if you're going in and Chubb and Lucky, I know y'all deal with contracts, and Lucky, I know y'all got that down pat. But it's just to know how to properly set your contracts, so you don't overthink, don't overdo. So you look for the overall area that the true destination where it can go. So you don't have to jump in and out of plays. Okay, say for instance you got in at, let's just say 73. Let's just say you caught in at 73, but your contract is aimed for like 67, 65. So if it's aimed this way and the market is still going, all you're doing is holding your contracts. You're just holding it and just riding it because it's going in the direction that your strike price is set for. 67.50 that we just talked about, 67.50, right? And then that next area from that is going to be, and then what are you doing? Also completing your cup on your 30-minute time frame. So even if I go to, let me go to SPY on a 30-minute, and so we can see it from, we see it from a put standpoint. I'm trying to go to a 30-minute time frame too, so we can see it from all angles. I don't know what's going on. I know it's a smaller time frame. And look at this. Look, inverted cup and handle, right there in your face. Look at this, inverted cup on a 30-minute time frame. So we did put everything together, even a 12-hour chart. where we can fall down to. We almost to that level, man. We almost there. We bought almost to that level that we talked about. Look at this. Why would I lie to y'all? Look what my alert said that. We did all the work. We put in all the work to see how far we're going to pull down to. Man, y'all got to give me credit, man, for calling this out all the way down, man. Helping you guys out, man. Come on, man. Y'all got to give me some type of credit. All the way down. Off this inverted cup and handle pattern from the tops, from the 200-day moving average, all the way down to 67. Man, y'all got to give me some type of credit, man. Y'all got to give me some type of love in the building, bro. Y'all got to, man. Almost all the way down to my right down to my area I called. Y'all gotta give your boy credit, man. Y'all gotta give me some type of love here. I eased y'all all the way down to it. I don't know what else y'all want from me. I eased y'all all the way down to that bad boy. To the very, very bottoms. And that's gonna be around 67.30. And look right now, we're almost into the 67. Well, we're gonna hit 67.50 first for sure. But we called out that area.
Jtraedz has donated.
Man, Naughty, thanks so much, Queen. Appreciate you. God bless you, Queen. And look at this. Still pulling. Still pulling. Take your time. Take your time. Look at that. Inverted cup and handle. Still commencing. Look at this. Still pulling. Still pulling. See where your true bottom's at? Where your bias stepped in at? It's going to be around 63, 65-ish. Right here, right here. Still got room to come back on down. Still got room. Still yanking. Still yanking. Still yanking. Let's see. Can we get that? Can we get it? What time it is right now? 11 o'clock? Not even 12 o'clock yet and we still yanking. Shoot. So how much lower? Damn, and this is the first half of the market. First half of the market still yanking. That is crazy word. But you see how to take your time to understand on how to get into these plays. Look at that. Take your time. Understand. You got to understand the true levels where we can pull back down to. Look at that, 67. Let me see, if it hit my alert, I'm out. I had to call all the way down to 67.50. I swear, it hit my alert, I'm out. I'm out. I'm out. You better not hit my 750, 67.50. It hit my alert, I'm out. All right, let me give some love to Nadia, though. Show her some love real quick. Appreciate you, Queen. Where's my super, Appreciate you. Thanks so much for the donation, for the dono. Appreciate you, Queen. And double to the chat, man. I mean, y'all killing it too. Y'all call out these plays, man. W chat, to Chubbs, Lucky. I mean, everybody who participated. Shout out to all of y'all, man. Job well done, man. Y'all killing it, man. Appreciate y'all for everything, man. Hell of a job. I mean, we called it from start to finish. I mean, all the way down. And then look, didn't it not play off of that 12-hour time frame too? Let me go. 12 hours. I mean, we called everything out. We called everything out, guys. Look. Let's go to it. 12-hour time frame. Right? Same range. Look at this. Back in that same range we talked about. Remember this old little range here? I'm gonna and look. What do we pull back down to? That's crazy. That's crazy. Right back down to them bottoms. Back down to them bottoms. Look. 67.50. 67.50. From 72.50, 67.50. 72.50, 67.50. See how I'm helping you guys play the rinse and repeat? Rinse and repeat. We played out the bull flag pattern, two-legged pullback. I told y'all, look like we're setting up for a bear flag. We could go on that second leg down, and there go your second leg. Down to what? 67.50. Could we possibly crack a little lower? Well, I mean, we could come down all the way back down to these old bottoms here. Those Friday bottoms. That was, what, 60, 64, 60, something like that. Right here to these old bottoms. If we do crack 67.50, you do have room to fall back down to even, you know. But we'll see. But we know what the destination was at first. I mean, all we did was play the range. 72.50 back down to the 67.50s. That's all we did. Play the same exact range here and here. That's all we did, guys. Play the same exact range. From tops to bottoms. Tops to bottoms. Play the same exact. Matter of fact, let me move this up a little bit. I think, let me see. Let me move it up a little bit with a. That was around what, 74.28, and then on down, but still lined up with it. And keep in mind, guys, watch that level 60 around 67.50. Because remember, old resistance can turn to possible support as long as they stay on top of it. Now, if they crack it, 67.50, then yes, you do have room to come back down to these low key areas. But let's just make sure that they're not going to hold that area for a possible, try to go for a bounce back up. But be careful. Watch this level here. Watch it. Be very careful. Be very careful. Be very careful because you may have buys sitting right around those levels. Be careful. Trying to short it at here. Be careful. If anything, if you want to go for a short, wait for a move back up. So and that's another thing for a lot of shorts, people that want to short the market. Don't chase the candles down. Don't ever do that. Don't chase them down. Don't chase them down. That's one thing do not do. Be very careful, especially if you don't know where the intended pullback is going to be. Don't do that. Save your account. So what you do is wait, especially if you know a certain area that buys can, especially if you've done all your research, you've done your homework to know where buys could possibly step back in. Do not try to short these bottoms. If anything, wait for a buy to go back up, have them go back into your territory where you can now trap them back on down. So in other words, after this sell-off, okay, wait for buys to step back up. Green, and then take them out.
Are you planning to come online daily?
Yeah, I just have to, today I have to do one more yard today, Queen, and I'll be done. But that's why I came on early today. I've been on since, I got on before the bell even rang. I was in, I think around 9 something. But after that, I might go back. Let me ask you guys this. Okay, which one do you guys prefer? The normal 1 to 4, or y'all like me coming in this early? Which one y'all like better? I'm gonna ask you guys this. Which one y'all like better? I mean, I just want to ask you guys this, everybody. Like, which one do you prefer better? The 1 to 4 like I normally would do, or y'all like this, me coming in early? And I mean, which one y'all like better? See what I mean? Don't chase it yet, because why? You got room to go back up to that 9 MA. See?
Lucky NW5.
Okay, 1 to 4, cool. I ain't gonna lie, I was thinking the same thing. All right, cool. Look, thank you so much, boss. Appreciate it. Man, and congratulations on your profits, man. I know you always killing it. I gotta get back in the Tesla. It was Hardware the one that got me out of it, man. He convinced me to get out of it, man. The Tesla's stupid. Don't trade stupid. I mean, don't trade Tesla's dumb. Don't do that. See, you're gonna be my encouragement to get back in it, man. But congratulations on your trade luck. Shout out to you, and also thank you for always being one of the trading leaders, man, helping other people, man, and appreciate you too, boss, for everything that you do. Appreciate you. You Chubb, everybody, man. Thank y'all so much. So yeah, guys, see why not to go for a short? See, because they may try to bounce off a natural resistance level. Because you got to keep in mind, all your indicators way up here. So that means it's almost like getting overextended on the upside. When you get overextended, what needs to happen? You need to pull back down to your indicators, right? So that's the same exact thing that happens in reverse. So that means when it's going down, and you get overextended on the downside, that means it needs to yank up like a magnet, because you need the 9 MA to crack a certain key level. You need to, between these indicators, because you need the indicators to it's like, okay, it's kind of like, you being a kid, right? And these are your parents. You can't go nowhere else until you meet up, until y'all align, and then y'all get the party started. So that's kind of like you being at the door, and your mom and your dad are saying, stop, get yourself back over here. And what do you got to do? Go back to mom and daddy, because in order for you to go through that door, you need to go with them. So, and it may create another little cup-like pattern. So watch as we push back up. Right around 70 to 70, 50. Watch that level, because you got to keep in mind, 70 it held up as support at one point. Remember that. You can turn support to now a possible resistance. So we got to keep in mind, what was the level that held before we fell on down? 70, around 70, 70, 50, right? So that means as we shoot back on up, not only will you be hitting 70, 50, you're going to be hitting that VWAP as well underneath it to retest. So it's up to you guys. I'm talking about the shorts, the people that haven't got in yet, who's waiting on it. I mean, if anything, you want to wait for a move back up to that retest of 70 to 70, 50, because you're going to have a lot of resistance above your head. So you're going to have, again, your 9 MA. You're going to be coming to counter with the 9 MA at the open. You're going to have the 20 MA lining up right with the 70, 50. And also you got the VWAP moving down as well. So you got all those heavy indicators coming. So the lighter ones, which is going to be your flexible ones, which is going to be the 9 and the 20. Your heavy ones, which is going to be the 9, is going to be the VWAP in the 50. And that's going to be lining up like right here. So in other words, you may get a little push or a little break above that 70, 50, and then you might get hammered right at that VWAP, right back on down. So I'll draw it out on what I mean. So if anything, go for a put opportunity there. So don't chase the opportunity here. Wait for it to go back up where you can reduce your risk, because you haven't broken this yet. So don't chase that at the bottom unless you're going in for a call for a bounce back up. But don't go for a put right there. Be careful. Now we crack it, that's different, but you got to keep in mind the lower you get, you're going into some demand zones. So be very careful. Be very careful. All right, so let's see. Oops. So I can see it going up towards like this key, almost like right here, right around the 70.50 for a little possible rejection back there. I can see that. As long as those sellers can keep the buys back underneath 70.50 back on down, I can see that. But just keep that on watch. Let's see if they're gonna go for a bounce back up real quick. But you gotta keep in mind 70.50 support at one point for a move back down, including your open. Don't forget the open either, because you got the open right here. Bounce back on up, and you got the 70.50 back on up. So you got these two levels that you need to take out back down. So as you go up, you need to take these bad boys right back on down. Take them out. So we already know for the first half of the market, you had a downtrend. So the question is, can we get the continuation, or as 12 o'clock rolls in, as I was talking to Chubb about, could those bad boys try to reverse off of the 67.50 back up? Keep it on watch, because you gotta remember that's that bottom area that we had on that 12-hour chart. So watch that level. That's why I told y'all, do not short right here. Don't do that. That's a very dangerous area. Very dangerous. Don't do that. If they break, they could. So they could. If the buys come in strong. Okay, let me ask you guys this. If buys do come in strong, what they gonna push up to? What they gonna push up to? What they plan on pushing up to? If they come in aggressive, let's just say they come in aggressive. We talking about rotation wise. Where are they pushing up to? If they come in aggressive off of these bottoms and back up, where are they going? What are they aiming for? What are those buys aiming for? Y'all don't know?
Jtraedz says 62.50674.
Yeah, no, you got it. Nah, yeah, you're right. There you go, Queen. But you getting it. But Naughty, but you see how you getting it though, right? You see how you understanding the rotations back? See, you getting it. See, Naughty catching it, baby. That's what I'm talking about. I love you, Naughty. But now you getting it. Now you get comfortable. Now you're starting to understand the rotations. See? The bottoms, we knew how far we could pull back down to. Now we focused on the rotation, and we know that 672 can act like a magnet. You know, you leave from it, you return to it. Boy, you go, Queen. You go. You got that. This is what I'm talking about. Shout out to Nadia. She catching it. She getting it. Shout out to Nadia. Shout out to everybody. She getting it. I told you you was gonna get it, Nadia. I told you. Look at that. That's my queen now, man. Shout out to the queen, man. I'm so proud of her. And I mean, she called it. Nadia, shout out to you, queen. So yeah, so you already know, because remember, that's why I told you, do not short. See what I mean by don't short? Now you see what I mean? Now you see why I said do not short right there. That's going to be very dangerous. And look what happened. That's why I told you, don't do that. Especially once you know those areas, those psychological areas, don't do it. Don't go short. Don't chase. Do not chase. Right here now is a buying opportunity to push back up, yes. But don't chase. Don't chase those bottoms on the put side. If anything, you better play it on the upside back up, because you got to understand the market rotates. Once you hit a certain key level, it rotates up. Once you hit a certain key level, it rotates back down. You got to play the rotation, guys. That's it. But yeah, guys, I got to soon head on out, man. I know I got to leave a little early. I got to take care of some properties. And after this, guys, I should be back to normal. So that's why I got on early this morning, because I wanted to still show up, be here for you guys, rock with you guys, break down everything to help you guys read the charts. I mean, to read the charts as much as possible. Just take your time. All the market does is rotate. And once you start to understand and identify those numbers, those prices, you know the psychological levels of buyers and the psychological. No problem at all. But Nadia, I'm so freaking proud of you, man, because you calling it out. I mean, because now you're getting it. And I'm so happy for you, Queen. I'm so happy for you. Because not only do you have and think about it. If we are getting that strong reversal, not only do you have that 72.50, remember, 200-day moving average too, where you can pull back up to the 200. Now, as we pull them back up, watch your indicators. So, as we're trying to go back up, watch your indicators.
Watch indicators to see, okay, will those indicators start to go for reversals? Will the 9 MA finally get back above the 20 MA? Will those indicators get back above the 50 SMA and the VWAP? Will we start to transition back up when now everything's going to work in our favor? So watch that as we're possibly pushing back up. Watch your 9, watch your 20, or whatever indicators you use, and surely watch your VWAP. Because back above the VWAP, you already know that's bullish. Below the VWAP is bearish. We already know how the VWAP works. It works for support and resistance on both ends. But we know after that strong indicator, the VWAP, your 200-day moving average. Because look which ones that took you out. 200, VWAP, bam, there you go. So, if we want to see a strong move or a beautiful play, is to put those bad boys together. It works in both favors. Like, it can work for a strong resistance. It can also work as a strong support. It can do both. But right now, that's why I told you, do not, man. Imagine how many people then jumped in shorting right here and got caught.
My problem is how low can go for the day I have to learn.
Well, okay. Well, Queen, that's where your 12-hour time frame comes in at, Queen. That's when you take a step out of your 5-minute time frames, because when it comes down to the 5-minute time frame, all we're doing is playing the. Let me put it like this. All we're doing, what just went off? What was that? Oh, Tesla. My Tesla just went off. 420. My 420 just went off. Hold up. My 420 just went off. I just heard it. Let me go back to my 5. So I will set my alerts. Hold up. My alert just went off. 420, didn't it? Remember I told y'all $5 increments, Tesla? Let's see if I was correct on that. Oops. Go back. Where you at? Where you at?
NW5TD says, TSLA just hit.
Bam! I know, I just brought it up. $5 increments, told you. 415, 420. Bow. Bull flag pattern, told you. Bow. I told him. Lucky I told him. Let me go to the 30-minute time frame if that bull flag is still commencing. That bull flag pattern. Bam! Bull flag pattern. Chubb, did we call it? 30-minute time frame. Bull flag pattern still commencing. Can't make this up, baby. And then look, Nadia called it too. Shout out to Nadia. Look, but y'all see how y'all getting it though. See how y'all brain is just. Boy, I love y'all, boy. Look at that. After we got those bounces from these bottoms, bam. What the bad boy trying to push? 7250.
Will you buy put at $420?
No, I don't trade Tesla. I still trade SPY in them. I trade SPY in them. I mean, I'll do it every once in a while, but that's like, I mean, I'll just be honest, that's like not my main focus. I mean, I'll say that for other people who do trade it, like I know Lucky trades it, and so forth. But yeah, I called out Tesla already. SPYs, I told y'all puts, do not put in, wait for the push back up, which now we're getting the push back up. And y'all know, don't forget about your pivot. We already know what buys trying to go to, 7250, and up towards that 200-day moving average. So 7250 up to 7350, keep those on watch. But as we are right here, we know what buys are trying to go. So look like they may try to hold a range between 7050, 7250. So as long as they can hold those bottoms, they have room to push up to 7250. That's going to put you in this range here until we either fall back below or get that push back up. So keep that on watch. But as we are in this range, watch your indicators. Watch your VWAP. So right now we're underneath the still, upper shadow, so that means it still represents weakness. And also watch your lower indicators, which is the 9 and the 20. So watch as we're in this consolidated area to see on how these indicators are going to pan out. You know, is it going to work in your favor as far as on the upside as they line up to kind of curl up? Or will it work in your favor as the downside as the 50 and VWAP remains resistance for the pull back down? So just keep it on watch as we get out of this consolidation. But man, shout out to everybody who, you know, understood the process, understood the program of 673s, 670-50 all the way back down to the 667s. Why? Because, and again, oh yeah, Nadia, I know you was asking me about that before I go to help you out on that. Hold up, Queen. I'm gonna help you out on that real quick too. So all I did and how I figured that out, Queen. Like I said, use the Twitter. I know you now. You don't have TOS. I know you got Weeble. But yeah, all I did, Queen, was just take this key area, and let me light it up too. Let me light it up so it can stand out a little bit better. Let me put a different color on that, different color code. I'll put green, I guess. I guess green. All right, so yeah. So all I did, Queen, and I know we have some upper areas, but
And I know 672 down. I know we had some tops around, what was 74 back down? So I'm trying to figure out, should I just go ahead and yank it up, you know, like expand the I might as well do that. Hold on, let me move it real quick. I might move it up or add. Let me see. We can catch all the candles on this whole entire range, so y'all can see the whole entire thing instead of halfway. So let me put 7250. So yeah, about 74. So let me darken that one. I mean, make that line solid.
Ingrid Jtraedz 2202 says, "Morning Jay, how's it going?"
Good, Queen, man. We called out, man. Had some great plays today. Called them out, especially the spy on the downside. We called that since 9:30. Called that 9:30 play all the way back down. Oh yeah, extended to my left. Left. Bam. Okay, cool. All right, Nadia. Okay, so I know it's in green. I know you can't really see it. Damn it, I had to put it in different colors. I'm gonna have to change the color on it. What color can I put this? Can't put it red. Yellow, maybe? I guess. All right. So y'all can kind of see the rotations, guys, when using this range. You can kind of see the rotation up and down, up and down. So, okay, Nadia, I know y'all was asking about bottoms. All I did was just take these bottoms and repeat it. That's it. Take these bottoms, draw a line right across, right across, right across, right across, right across. So if you're on these tops, you can see right here. All we did was rotate from these tops back down to these bottoms. That's it. All I did was just take the pass, and now I'm trying to put it to where I can see it. God dang, I hate this dang thing. God damn it. It's frustrating me right now. Okay, I'll stick with this. Bump this. All right, so all I did was just take the tops all the way back down to these bottoms. I mean, look at the rotation. Look at the rotation. Every time it came down to these areas, you bounce right back on up. Down to this area, right back on up. Down to this area, right back. I mean, that's it. All you do is play the rinse and repeat game. Think about it. Look what we pulled back down to. Ain't the counter that we in right now. Look at the bottoms. Ain't they lining up right with these bottoms here? Ain't they lining up right with these bottoms here? Ain't they lining up with that's it. It's just psychological plays. So again, we had to first and foremost we had to identify which way we're going today anyway. So I broke it down. I said, guys, we got an engulfing red counter that was from last week. So that looks like a bear flag pattern. It looks weak. So we identified, we went through everything to figure out, okay, we can see more downside than upside. So now that you already fell to the downside, now, which again, buys are stepping back in, now you have an lower shadow. Now you're getting the buys to step back on up. What level are they trying to get back on top of? 672.50. So you can clearly see the psychological play. So every time they come down towards these bottoms, they push right back on up. 72, 74. Come back down to these bottoms, possible 72, 74. So we already know what buy's game plan is, but they have to achieve it. They got to get the counter to close on top of 72.50. If not, you'll be still in this range until it makes a true decision. Whether we get that break out above 72.50 or that crack right back below that 67. So that's the thing. So we know buyers, we need to get back above that price point. Sellers, we know we need to stay below this price point. So that's to get us out of this range. To get us out of the range. If we stay in the range, play the range. I mean, y'all already did. I mean, from these bottoms back up to the top. I mean, y'all already played the range for the day for right now. We just have to see on how the second half of the market is going to line up. But shout out to everybody, man. Congratulations, man. Job well done, man. I could be more proud of this team.
Thanks.
No problem at all, Nadia. But yeah, that's it. All you do is take the because I know you got Weeble, because anyway, if anybody else is using Weeble, y'all can probably help her with this. Well, also I think you use the same one I use. But if anybody else using Weeble, is it a way that y'all can like change our time frame? Like, okay, for like mine, for example, and Nadia, I'll show you on mine. Like here, I just go to here, 5 minutes. I go to customize lists, and I just pick a certain frame that I want. So I go to intraday, like daily. Like daily is the one we talking about. So I go to, wait, was it daily or is it intraday? Is it daily, right? On mine. Which one's that? Oh, daily. So yeah, so I put a 360 and then I'll go for like a 12-hour time frame and I just add it to my list. That's what I do. Oh, okay, gotcha. I'll say gotcha. But yeah, that's how I do it, Nadia. So I go to my intraday. I set like and the reason why I put 360 instead of 180, so I can just see how, if I need to go back further enough to make sure everything aligns the way it should as we go into
the present. That's why I do it.
Says, I only buy and sell on Webull watching chart on Thinkeraz's web.
Man, as a matter of fact, let me ask you this. When you trading, are you using your phone or are you using the because that's something I forgot to ask. Are you using a desktop? That's something I forgot to always. And look right here. And look, Nadia. Bam, 7250, baby. Look. 7250. Nailed it. 7250. There you go. Right back to them bad boys. 7250. You're not too far from it. Trying to get that 7250. But shout out to them. But yeah, that's what I want to ask Nadia. Do you use a cell phone or like mobile? Do you trade mobile or do you trade like? See, a lot of us use desktop because it's more convenient. It's easy. You know, with cell phone, with mobile is a little bit tougher. You know, it's hard to kind of.
Jtraedz says, watching chart on desktop, trade on phone.
So you can't trade on the desktop either? Like on here, I mean, like with us, I mean, we can trade on desktop. You know, we can trade and watch the charts at the same time. You just gotta set the chart.
Says, desktop chart.
Yeah, okay. See, like with TOS, you have an active ladder where you can put in a buy symbol, a buy signal. Where you can like for here, I'll show you for example. Hold on. Like, and I'll drag it over. Like on my side, see, I can use this to buy, sell, whatever. Once I set up my strike prices, right? All I do is buy in. I can buy in right here. I have a limit buy, and a limit, limit sell. And that's all I do. Once I understand the areas that I'm in, and I know the price points, and I have a certain target in my head, all I do is, I know we're at this certain key level. Again, I'm basing it off of what I see on spot. So I know if we topping out right here, okay, this is when I need to go in for a put. Buying the lows. So that means that once I get in at these lows, and this bad boy start to turn, that means that my put should go up. And as it goes to a certain specific price that I want to get out, all I hit is the sell button and get the hell out. And that's it. I wait for buyers to step up. So.
Jtraedz says, I don't have money on Thinkeraz's web.
Oh, okay. No, well, I thought they had it for Webull or something. I thought it was a certain setup kind of similar to TOS. I'm sorry. But yeah, that's what I was saying. I thought it had an active ladder. I apologize. So yeah, and all I do is, like I said, go up to a certain, because me, like I said, you know me, I like 10 cent increments. You know how I am. So 10 cent increments. So even if you're going in with, let's say 5 contracts, and you get in at 14, that means every 10 cents that you making $50, because 5 contracts, 500 shares. So that means from 14 to 24, you're up 50. From 24 to 34, you're up 100. Even if you just got 20 cents in your head. Say for instance, I just want to make 20 cents off of 5 contracts. I mean, okay, you know where your tops is, right? Okay, let that bad boy, you get in at these lows, and then 14 is the bottom. Man, as that bad boy dropping, your price point, your price bar should move up. So it means it should go up, and that means it should drag your sellers and your buyers up. You should have a little mark right here, 14, some little arrows showing that this is where you bought in at. But as it drops, that means, see what it's doing? Well, that's because it's on puts as it's going up. That's why it's going the opposite way. But y'all get what I'm saying. So as it's dropping, this should move up. So if you got in at 14 cents, let's say for instance for 5 contracts, and the market was falling, that means that as you go up 24, you can start to put in your stop loss right here to see, okay, 24, just to have something. Put in your 5 contracts here, but wait for it to go up. Wait for it to go up. Like, don't put in right at it. Wait to see like a little bit of a push above 24, up into the 30s. Up into the 30s and push up a little higher. Now, if it starts to spike, man, just slowly move it up. Like, once it goes up, and your idea area is to go in at 24 cents, 24 cents, 10 cent move, then as this thing is spiking on up, then place your stop loss. And as it's still going, you can see that momentum taking off. Man, now you're seeing this price bar going up to 30. Now you're seeing it going up to 34. Now you're seeing it going up to 40. Now you're seeing it go up to 44. All you do now is just take the area where you originally put your stop loss in, move up 10 cents. What was 34. So 34, bam. Now that's 100. All right. It's still spiking. Man, now that price bar is going up to now 54. Now it's going up to 64. All right. Move your strike price up. All right. Now you at 44. Now you're up 150. Now, I mean, it's steady going. Now it's up to damn near 64. All right. Moving on up. 54. Now you're up 200. Now you get it. That's just the way to set it. I mean, that's how I do it. So instead of getting, getting scared out of your position. And the reason why I say set it right here, because push comes to shove and it pulls back, you're still making profit. So, say for instance, like, all you wanted was 100. Let's see, 24, 34. Yes, $100. Okay, say if it's it goes up to 34. All right, and it goes up to 44. Just keep it right at 34. Keep it right at 34, cause at least you're still locking in with something. You got $100 in your belt. All right, cool. Cause you don't want to set it, cause you don't want to get knocked out too early. So just keep it right where you at. As long as that 40-cent level is holding, those buys are holding 40 cents, and then push on up, then you can start to move it up, and just bank on it. Yeah, just slowly bank on it. But start with your initial area. Again, you gotta think about what type of profit taking you want to start off with anyway. 10 cents, 20 cents. Start off with that, and then keep it rocking and rolling. And that's how I do it. That's what I do. 10 cents, 20 cents, and just because like I said, 5 contracts alone, you're making $50 every 10 cents. A thousand shares, you're making $100 every 10 cents. So it's up to you and your preference on what your preference is, because the more you have, the shorter period of you have to wait on it. Like, okay, if you're going in with 1,000 shares and all you want is 100, then all you need the market to do is make a 10-cent move. Then 10 cents you're up, lock out. If it continues to keep moving, just move it up. But if 10 cents is your area, set it at 10 cents. Not that bad boy blowing up 20 cents, 30 cents, 40 cents. Just slowly move your stop loss up every 10 cents, every 10 to 5, however you want to do it. That's it. You're still going to bank even if it pulls back down. At least you're going to have that stop loss area. But yeah, that's how to do it though. So you don't get confused. It's just because a lot of people that jump in but don't know where the hell to jump out. But yeah, it's just up to you on what your preference is. Like I said, me it's 10 cents, 10 cents, 20 cents. Because I'll go in with 5 to 10 contracts where I don't have to stay in long. Because all I do is let it pile up. 50, 50, 50, or even 100, 100, 100, 100, whatever the case may be. I'm taking something, versus nothing. Or wasting a trade where, man, $5. Something like that to that nature. So, but yeah, it's just up to you and your preference and how, first and foremost, you got to ask yourself, what type of trader are you? Are you long buys or are you short buys? So if you're long buys, then you need to wait for long opportunities. If you're short buys, then you wait for short opportunities. So, Nadia, I know you all talked about bottom. So 9 times out of 10, you pretty much long buys. So what you would need to do is look for strong key areas or areas that we have hit that held. So, and then we already know the 672.50, we already know that's a pivot point. So we know that right now we're underneath it. If we get a break above it and shoot on up, pull back, we know that we can utilize 72.50 for the possible bounce back up on up. So we know if we break out, go up to let's say for instance 76.50 and then yank back on down, then we can utilize 72.50 for the possible move back to the upside. So that's another way to kind of look at it. And then we already last week we already broke down uptrends on how to get into an uptrend. Pull back bounces, pull back bounces, pull back bounces, pull back bounces. So that's just an easier way to do it. Instead of because I know a lot of people would try to jump in on something like this, and then not knowing where the tops is, because they just chasing the green candle, but they're not knowing that what's right above their heads. How you know resistance not above your head? How you know the candles is not about to transition? How you know it's not about to do a green and red move right back on down as soon as you get in it? So I like movements like this when you get consecutive movements on down, something like this, consecutive red candles, when you get a nice transition over, especially towards a certain key area that's a psychological level. So these are good areas. Something like this, when you're getting all red candles to a certain price point, and now you reverse it. Look on how beautiful the play was, and look on how beautiful the transition was. Red to green. Beautiful transition. Beautiful transition. And then once you get a strong engulfing green candle, you can play the possible next candle over. Because that means that once that green candle pushes and holds, okay, that means that they're trying to hold a certain bottom here. So 670, 50 for the possible push up towards 671 to 672. There you go. It's another way. It's different ways to look at it. It's different ways to look at how to enter it. It's up to you on what you do on, again, if you're looking at it for scalp purposes, man, but everybody's different. Some people are long buy, some people short, some people scalp. Everybody's different. But you just have to ask yourself what type of trader you are. So we know as of now, right now, before I leave, that we know 672.50 until we break out above that price point is going to be resistance. We know that's the top, and we know this is the bottom, thus putting us back in this old range. It's kind of like a channel breakout in a sense. It's like you broke out of the channel, back in the channel. See that? It's like you broke out of a channel, back in the channel. Cracked out of a channel, back in the channel.
Today I did both.
But Ain't nothing wrong with that. Nothing. If you got the skill and the patience, I mean, if you know how to do it, do it. But I'm saying is a lot of people do it, but they'll force themselves to do it. It's like they're better at going long, but they'll force themselves to go short because they're desperate for a trade. If that makes sense. Allow them to do that. So, okay, just kind of like right here. Okay, see how we got consecutive green candles up, 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 up. No red candles yet. Green candle, green candle, green candle, green candle, green candle, green candle, green candle. So if we got a transition right here, what makes you think that we can't get a transition up here? So just like we got a red to green, who's to say that we can't get a green or red back now? So keep that on watch. But right now it's still bullish. We still pushing. So, I mean, right now buy still have it. But right now it's all consecutive. So we haven't got an area of like a pullback session yet. So right now just all consecutive green candles. Up, 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 up. So that means just let it push, let it push, let it push, let it push. So if you are in, guys, let it push. If we get that break above 72.50, the next key level going up to 73.50, right where that 200-day moving average is. Don't forget, 200-day moving average is sitting right at 73.50. So don't forget about that. You're pushing out right where it's at. Question is, can we break out or will we get rejected and pull back down? So you do have room to run up to it, but question is, will we break out? But other than that, man, guys, I had a blast. Tesla still looking good, guys. 420 is still holding. The next target is going to be 25, but you will have that little mid area of 422.50. Keep that on watch. Now, the minute you break above 422.50, you do have room to push up to 425. Now, it goes out to Luck and everybody else. So, as long as you stay above 420, set you up a range, set you up a channel. 420, 430 with the mid area of 425, right? Because it moves in $5 increments. So, keep that in mind. So, we break above 425 up to 430, or before 430, we know what's going to be the next key area there, 427.50. Because you got to think about those little small little areas, that like kind of like what we dealt with before. 417.50, 417.50 before what? 420. Right now, still looking like a bull flag pattern. We are above the 200-day moving average on that bad boy. With room to run up to possible 425 to 430. I mean, because nothing else to really hold you. All your indicators are underneath you. So, I mean, for my Tesla traders, I mean, it look like you may have room to push up towards 425 to 430. So, I mean, I'm just telling y'all to gear up. I mean, to just beware of that. I mean, bull flag pattern. I mean, Tesla's bullish right now. So, I mean, we definitely possibly have room to possibly push up to 25 to 30. SPY, as I was mentioning, watch that 73.50. From that 73.50, the next key level you're going to have.
Jtraedz2202 says, do you watch VIX to confirm SPY direction?
Right. To be honest, all I do is look at it on my chart. Like, normally when it's on top, I normally look at it in the percentages. I'm like, okay, that means, okay, bears are in control. And when SPY's on top, bulls are in control. But right now, all I'm doing is watching as we bouncing back on up. Now, the reason why, because this was a psychological level. That's why I was telling everybody not to short this. That's why I told shorts don't do this. So, we do have that 200-day right in front of us. And as I was telling you guys, you do have room to push up, and what you are. You get that break above 72.50, right up to 73.50. But watch this level as we get this push. So between 73 and 74, watch these two specific levels. Now, in order for us to get that continuation on up on SPY, you're going to have to stay on top of 73.50 because that's going to put us above the 200, right? The 200-day moving average. Because you got to keep in mind, 200-day can act as a strong resistance, can also act as a strong support. So until we can break above it, 73.50, that's going to be a resistance until we break above it. Now, once you get that break, now we will go for that reversal, where we'll do a breakout, pullback breakout from 73.50s up into the possible areas of even 76. We'll go back to the old pre-market highs. But watch these two specific areas right here. 72.50, 73.50. Watch these two specific areas. I mean, it's still looking bullish. I mean, especially Tesla. Tesla's still pushing. So 422.50 up to 425. Keep that on watch. But watch these two specific levels. You got to keep in mind that 200 is right above your head. So I can't tell you what's going to happen. I mean, I know we can run up to it. Just like I told you this morning. And then look what happened. You pull back down. So, these are what these other indicators that come in at. See, as long as these hold, see, because, okay, what needs to happen is you need to close out the gap. So, you need those indicators to move up because you want to close out as much space as possible. Because as long as these, matter of fact, let me do this. I'm going to take everything off. Let me show what I mean because you can't see it. And I do apologize. All right, indicators alone. Okay, so from this 200-day moving average, right, down to these indicators, you have a gap fill. See that? You have a gap fill, whether it's on the upside or the downside. So from that, so let's just say we'll just start with the VWAP. So from the VWAP up to the 200, we know we can fill the gap up. Below the 200, we know we can come right back on down. So what we need to do is close this huge space, which is why we need those indicators to stop it, to prevent it from dropping even lower. So that's why with the 9MA, we need to hold that bad boy, because we want to create some type of like a wedge. We want to create some type of an ascending triangle pattern. So, because you got to keep in mind, the reason why you're going to have a lot of free fall space, because you got a big gap to, to play around. We can go back and forth, back and forth, back and forth. But until that space starts to tighten up, then it's going to make a true decision. But like I said, 200-day moving average, you got that. Then back down to these bad boys. But look at all this open space. Look at all this open space. It was opened up between 73s all the way back down to the 71s. So we need to get these bad boys to close out. So in other words, and I'll draw it out real quick too, right where the 200-day moving average is at, you want this to happen. So we want to take the 200 and we want to take these indicators, all these bad boys, if we can, and close it. Now you see it. We want to tighten it because we don't want to give them no more space to fall. So we want to tighten it where this bad boy can have less space to fall, where you tighten, and then go on an initial move. That's what you want to do. So you want to tighten up. You want to tighten up those indicators as much as possible. You don't want no loose indicators all over the place. You want to tighten them up. So see all this free space? See your 9MA is moving up. So it's trying to create something in between here and here. So, but you still got a lot of open space. Still got a lot of open space. So we got to start tightening up. We need them bad boys to close. Tesla's still pushing. That's crazy. That's crazy. I'm trying to see if I can find one, for example, where we found one that tightened up and squeezed. I mean, because you had the two. I mean, you had these. Well, your 9MA was. See, 9MA created a tighten up right here. See that? Your 9MA went up. It tightened up right with that 20 with the 200 moving average and squeezed. But you see what I mean on how your indicators it closed up a hole. As those indicators moved up, I mean, then even with your VWAP wound up merging in with your 200-day moving average, so it had nowhere to fall, because look right here, as you pull back, you had safety net, and after that, it went on up. So that's what we need for today. So we just need to close it out. So you got your safety net, you got the 9MA. Everything started to slowly move. We just want to close this gap. We want to close this gap up. We don't want it to start falling no more. And look at Tesla. Jeez, that bad boy still yanking. See, 9MA still pulling on up. So it's still looking good. Still coasting. So we just need to tighten up. We need to close out this wedge and then go for that push. That's what we need. And if you can get it, 76. I mean, I can see 76 in the play. Back up to those old pre-market areas. So let me put my lines back though. All right. So all right, guys, about to be heading on out. Tesla, like I told you guys, 422.50 up to 425. There you go. So there y'all go on that one. All right, guys, about to be heading on out, man. I do have to go run and do some stuff, man. But thank y'all so much for joining me, man. I definitely appreciate you guys. If y'all are new to my channel, man, please do your boy a favor, man. It's free 99. Smash that subscribe button on YouTube. If you already subscribed, hit the like button if you are enjoying the content. If you're on Twitch, subscribe to avoid all the ads, which is not my fault, man. But I do thank y'all for everything, man. Shout out to everybody. Shout out to the team. You know, everybody making money. Like I said, you got Tesla still on this bear flag. I mean, on this bull flag run right now. Definitely got room to still push up to 425 with SPY from 72.50 up to 73.50. Watch that level. As I told y'all, we can fill it on up, fill that gap up towards that 200-day moving average. So right now, still looking good. Shout out to everybody. But yeah, man, I'm about to be heading on out. Got some work to do, but I will be back in tomorrow. My normal times 1 to 4. So y'all stay blessed. Y'all stay safe. Thank y'all so much for joining me. And y'all already know what I'm about to say before I head on out, man. Maximize your reward, minimize your risk. Always put, man, you too, Ingrid. Thank you so much, Queen. Appreciate you. Man, you too, Queen. And I was glad that I got to help everybody. Man, you too, Taylor. But I was glad that I got to help everybody navigate from the, from the pullbacks for the move back on up. So I was glad I got to help everybody through it, though. So it's all that matter, man. I'm here to help take care of y'all, do the best that I can, man. Tesla, y'all not too far from hitting that 425. SPY, y'all not too far from hitting that 7350. Definitely keep that watch. We're still in a bullish movement. That bad boy still trucking. So don't count it out. But man, shout out to everybody, man. But just take your time to understand how to read these charts, man. And don't put too many stocks under your belt. Have at least 2 to 3 where you can understand the personalities on them, how they move, $2 increments and so forth. Man, luck you too, boss. Man, you too, man. Y'all stay blessed and stay safe, man. Y'all know what I'm about to say before I head on out. Maximize your reward. minimize your risk. Always put grateful for greed and you will succeed every single time. Till then, guys, I'll see y'all tomorrow for Take Profits Tuesday. Stay blessed, stay safe, man. Love y'all. Peace.
Subscribe for more content.